Good morning, everybody. Luke, I like your enthusiasm this morning. Nice job. Soon to be millionaire day traders. How's everyone doing today? Nice to have you. Who do we have in here? Gary, I'm not sure you're still listening. Hope everything goes well. Good morning, Paul and Erla and Mr. Flowers and Luke and all you guys. Good to have you. Welcome to the room, y'all. Hey, Josh, Gerard, good to have you. Malcolm, I do like my groups. Base hits. Man, Ron, I gotta tell you, Ron, you inspired a thought process for me this morning. Um, and we're gonna get lessons on when it's time to let go. Um, Base hits. Base hits. What a great phrase. Getting paid, right? Getting paid. All right, so we're going to talk about it, but you've inspired me this morning. You and Mr. Flowers, it's a combination of the two, and that's where today's lessons are going to go a little bit. When we're finished with the basics, we're going to talk about some management ideas. Um, because management's the second thing, guys. That's the second thing you do after you enter the market. You've got to manage trades. So um, everything I do is very sequential. Everything I do is very what's the word I'm looking for? You have to build a base and then grow from the base, guys. And that's exactly what this class is. It's creating a solid platform for all of you guys. Um, yeah, we are okay here, Ron. It got pretty crazy. My best friend and his family lived with us last night. Had a full house last night. There's still about a 500,000 people in Dallas without power. We're very fortunate. We held strong, so we turned it into a reason to do a lot of cooking and hanging out and talking. But we were the Holiday Inn last night. Not everybody in Dallas was that lucky, so it's I feel very fortunate. Should have moved there. No way. Actually, I'd probably enjoy it. Um, I do like Texas though. I've tried to leave it like 4 times. I keep coming back. So I forgot what I was talking about. It's gonna be a good day, guys. Let's check news and see what's going on. What is today? Today's Wednesday, May 29th. Can't believe it. Appreciate that. I really do. I appreciate the thoughts. We moved a lot closer to Tornado Alley here. Was talking about my new thought process for Morgan. Which one is that, Malcolm? Um, I have so many of them every day. My brain is like this. You don't know. You said it. Well, if I repeat it, point it out for me if you don't mind. That'd be awesome. Um, Guys, today's Wednesday, May 29th. Every day I'm going to forexfactory.com/calendar. And I was talking to a buddy of mine yesterday, my best friend's little brother. He goes, so you don't watch stocks at all? And I was like, no. And he goes, and you don't wait for news releases to buy or sell? And I was like, no. He goes, what do you do? I said, I trade patterns. I trade the same patterns every day because they've been proven to win more than they lose. And it's like playing a video game when you're 12. When you have the pattern down, you win. Or you win more than you lose. And guys, that's what we do. And one of my patterns before I ever think about trading is checking the news because there's people with really deep pockets that trade the news, that wait for somebody to say something. So forexfactor.com/calendar gives me this convenient little orange or red box letting me know if there's medium impact or high impact news coming. And I'm of the opinion in my own personal life that if there is a medium impact news or a high impact news, that somebody with more money than me might change the direction of the market. They may make it spike or bounce, and they're just waiting for that news release so that they can react. We have the amazing advantage of not needing news to trade. We don't need that to get us where we need to be. we just trade these patterns, and news releases can disrupt our patterns, guys. So I personally choose to not trade, whether it's medium or high impact. I go do something else. And I think that leaving yourself a sticky note on the monitor, or hey, good morning, Ken, or a reminder with Siri to not jump in, pays huge dividends. Last time I traded news, and I want to. Uh-oh, is everybody? Can you hear me? Guys, give me a Y if you can hear me, please. Just cut out. Paul can hear me. Morgan can't. Okay, hold on. All right, guys, I'm coming back from the great beyond right now. Let me know if you can hear me. Trying to come back in. Are we good? You guys got me? Yeah? Okay, cool. I don't know why Discord does this first thing in the morning, but it does. It's weird. Um, Lost my train of thought again. Morning routine, exactly. I'm very big about routines. Set a reminder, guys. Really, the first advantage you can give yourself every day is not trading into these news releases, avoiding that whole emotional response. And then everything that I talk about. And this is one of the things that, so John Novak and I love to just BS over Skype. Hey, good morning, Doug. Good to have you in here. Um, and we're constantly talking about how do we make it easier for you? How do we keep you guys focused on the best? How do we give brand new users demos in first 30 days? What's it going to take to get you guys where you want to be the absolute fastest? And we really do talk about this every day. And the easiest way has been consistent forever, it feels like. And it's keeping you guys focused on what's called a high probability trade. So my first hour, if you're brand new with me, my first hour is the same hour every day. I'm a big fan of recognition through repetition. And this high probability trade, what was your, I'm not sure, Paul. I'm not sure where that discussion was. All right, I just rebooted. Can you guys hear me? Can I get a Y from you if you can hear me? If not, I'll do the reboot thing. You're good, Paul, you're good. So, Paul, I'm not sure where you guys had that discussion, to be honest. If you want to link it to me or tell me what was said, I can probably translate. I speak very fluent John Novak, which is good for you guys, trust me. Reboot, right on. You saw it somewhere? Well, then I'll look somewhere. Was it in this room at least? Or was it over in Traders Chat? Okay, yeah. I don't monitor Traders Chat very often. If you can go back and find it, give me a link to the conversation. I'll look at it and translate for you. Um, but I'm not sure. Was it regarding injuries? Was it regarding exits? Was it regarding what they are? Just the word synthetic, maybe? Because anytime you hear synthetics, oh, okay, he's redoing them. No, it's not that he's redoing them. He is making them workable on a standalone platform. Um, so John has been spending an enormous amount of time and resources creating a platform that will run in a window rather than needing a platform to run it. Um, your reboot didn't work. I'll reboot, Morgan. So yeah, Paul, he's working on some stuff that when he talks about those things coming together, it means that that platform is coming together. Hopefully you guys can still hear me while I come back. I'm doing the reboot again. I apologize for the challenges, guys, but Discord loves to mess with me first thing in the morning. And that's that routine, right? Okay, can you guys hear me? We good? And then let me get my screen up there. It is playing games. It's probably intimidated by your avatar, Morgan. All right, we're back. I'll leave that up. So Paul, what that is he's working on a platform that is standalone, that you can literally have a browser version with all of Nexgen's indicators, workspaces, everything, and it's getting closer and closer to completion right now. So he's excited about that and sharing it in the room. That's all that is. It's an opportunity to no longer have to be. Uh, I was wondering if anyone would catch that, Muser. Um, to where if you make the choice to no longer be with Ninja, that becomes an option. Um, guys, we're going to talk about a high probability trend trade today. We're going to talk about a trade that typically wins 70 to 80% of the time. We're going to talk about a trade that creates confidence through the memory of success. And this trade, this high probability trend trade, new users, please turn your volume up for a second. This is the trade that's going to teach you to read your indicators. This is the trade that's going to turn you into a chart reader. This is the trade that's going to have you recognizing advantages and being able to capitalize on them as a brand new user, to have a very solid plan to give you the opportunity to, to really be profitable and successful as you learn to read your indicators. And a high probability trend trade, and Luke, I just want to make sure, do you have me now after my reboot? I'm a worrier. Hopefully you guys can hear me now. If not, somebody will say something, I suppose. A high probability trend trade is defined when each indicator on every chart agrees for the trade. All your triggers are going to be the strongest. There's going to be nothing in your way, no termination conditions, and there's going to be no trouble spots between your entry and your target, guys. And this is the best of the best. This high probability trend trade is the first trade. It's the platform. It's the foundation. Are we struggling with sound? Can Okay, hold on. I'm gonna reboot. All right. And for you YouTube viewers, I apologize for this. We do have some technical difficulties this morning, um, but it's nothing that we can't work through. So thank you for your patience over there. All right, can you guys hear me now? Just curious. All right, cool. So guys, if I say let's do a reboot, if you hit Control Alt Delete on your computer, it's going to bring up your task manager. So if you're struggling with Discord giving you problems, maybe you can't hear, can't see, whatever, hit that, bring up your task manager and click on Discord and hit end task. And what that does is it's going to stop all the processes of Discord and it's going to kind of give it a little bit of a fresh start. And that's what I just did. I just went and kind of did a full run through on that one to bring it back. Hopefully it works. Yeah, Rob, it's weird when I'm techie, isn't it? I am not the tech guy. And guys, it's okay. We got nothing but time this morning. Let's knock this out. We'll have some fun. Hopefully you guys can hear me. And we are going to focus on that high probability trend trade as people come back into the room. Um, And we're doing it for a reason. So I'm just going to kind of slow roll into this. But guys, this is the same hour every hour. You can always go back to YouTube in worst case scenario. But we're going to focus on chart reading. So if you're brand new with me and you want to be a $1 million day trader, I want you to be a for free chart reader first. I want you to just learn to start looking at your charts. I want you reading your indicators and looking for advantages, because what happens is if you focus on becoming a chart reader, if you focus on learning to take the information these indicators are giving you, you're going to understand the three very vital concepts, guys. You're going to understand where the market is likely to continue. This is going to become an entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is going to allow you to take profits at the correct spot. And you're also going to understand where the market is likely to stop. And this is what we call a termination condition. And a termination condition can end the forward progress of the market, and it can reverse the market, and it can create untradeable bounces. And we're going to focus through just one trade on these three elements. And I know I still have people coming in, guys, so I'm talking a little bit slow here. Becoming a chart reader, hey JW, is the first step of finding success as a trader, guys. And we're going to focus on this high probability trend trade to do it. And the high probability trend trade is three rules, guys. That's it. Let me make them huge here. Only three rules. So if you're brand new with me, again, I'm going to tell you right now, simplicity is the key to finding success early. There's a million ways to use this software. There's a million ways to enter the market, to exit the market. We're going to talk about the highest probability way right now. And it's the high probability trend trade, and it's three rules, and each rule provides an advantage. The advantages are in yellow. So in order to enter a trade as a brand new user, you want the combination of momentum, a clear path, and an entry area. And we're going to define each. I'm going to give you pictures of each. We're going to talk about the advantages, how to recognize that. I'm even going to teach you how to study this. These three rules, providing three advantages, come to be on only two charts. And once again, you're going to see people in this room with more charts. More charts doesn't mean higher probability. More charts means more work on your part. It means that you've got to analyze more options to make decisions. And I'm telling you guys, the way I teach this, you don't need it in the beginning. Your large chart is a very broad stroke of a brush, and we actually take one bar on the large chart, the most current bar. From that bar, you will understand the direction of the market. If the background is green, it's going up. If the background is red, it's going down. It really is that easy. You will understand the momentum of the market and whether or not you have that advantage through rule number one. And you'll understand if areas are in your way, if there's those likely to stop areas. And if there's not, rule number two is going to let you know that you have a clear path. 66.6% of your advantages going into the high probability trend trade are going to come from that large chart. When you have them, when you have momentum, when you have a clear path, guys, that's when you'll turn your attention to a smaller, faster chart. And you're going to use this smaller chart. It's a refinement chart. It takes an x-ray of this one bar, and it breaks it down from the top of the bar to the bottom of the bar. It's about 15 to 30 bars as your small chart retraces down and pushes back up. You're going to use this retracement, this smaller, faster chart, this refinement chart, and you're going to pinpoint with pretty amazing accuracy where the market is most likely to continue. This becomes your entry through rule number three for the highest probability trend trade that you can take. That trade that typically wins 70 to 80% of the time, right? That one that's creating confidence, the one that's teaching you to read your indicators. So only two charts, guys, and only three rules. And I'm gonna give you the recipe right now. And guys, one of the biggest reasons that I share this every day in class is because I fought this tooth and nail when I started with the software about 4 years ago. I refused to do most of these things, and it cost me $5,000 over the course of a couple hours, losing. And I had no idea why I lost. So your step-by-step path to becoming a confident trader ASAP, guys. The first thing, and I can't stress this enough, post in the room. Post your trades in the room. Paul just dropped a picture in the room. Every time you post in the room, guys, in the second hour and the third hour, I'm going to click on that link and it's going to bring a picture. And what we're going to do is I'm going to talk about everything that I see, but you have to tell me what you see. Um, Paul sees a pivot, but it had three divergences on the small chart. Does it make it a strong top? No, because strong tops come from the large chart. It's a 50-50. We're going to talk about what this means. Paul uses a refinement chart to enter the market with the least amount of risk, and he's able to capitalize and make a little money on this lower probability trade. Um, Beautiful trade, Paul. We'll go back in and we'll look at it again. But every time you guys post in the room, what you're doing is you're saying, hey, Mark, I'm doing things. Help me understand that if I'm doing them right. I'm reading my charts. Are my reads correct? Here's my entry. Here's my exit. Am I getting the most out of these trades that I could get? And guys, if you give me all this information, tell me what you saw and why you did it. What happens is I can say, hey, Paul, your read is great. Or hey, Paul, there's a little challenge with it here. Let's go back to the lessons and let's kind of reinforce what it is that you're looking for. And Paul shows me where he enters and where he exits. And I can say something clever like, hey, Paul, if you just would have been a little patient, waited for that pullback, we could have reduced risk drastically. And if you trusted the large chart and that momentum a little bit, you probably could have made it down to that next fib. And this is the look that does it. So we're going to focus together, walk hand in hand through this journey, guys, and we're going to talk about chart reads and entries and exits. And the goal is always, how do I do it better? How do I do it with less risk? How do I do it with more profit? How do I focus on patterns that provide that advantage? So every time you post in the room, it's like getting a private session with me, guys. We're going to focus on what you see, what you did, and we're even going to talk about how you felt a little bit. And I'm going to give you this right quick from the software guide. There's a whole section on how to use your screen capture software, guys. When you downloaded your demo, TechSmith Capture was put on your computer. There's a video that shows you how to use it right here. I'll go through, and I'm more than happy to show you guys exactly how to do it. If you need help, just raise your hand. Let me know. Let's do it. But this is what TechSmith Capture looks like. When it's open, this is your icon. You guys, it's the easiest tool that you're probably ever going to use because it's 100% click and drag. So if I take this capture software and I click this button, this red button that says capture, if I hover over one chart, I get one chart's worth of information. But if I left click and drag it from the top right from the top left to the bottom right, then I'm getting both charts worth of information. And since it takes two charts to enter the trade, it's important to have two charts of information. When I release the mouse, that's going to give me the options to either capture the image, take a video. I'm going to capture the image, and it's going to give me an image preview, guys. And this is going to show me timestamps, and this is going to show me price. And I'm doing this because the idea is I want to be able to line the two up. I want to be able to take the information from the large chart and see how we did with the entry on the small chart, the same way Paul showed us. I can use these tools at the top: arrow, call out button, and shape. So what I can do is I can say, hey, look, Mark, I'm going to draw a down arrow because the background's red and the trend is down. And I'm going to say, Mark, this was my momentum. Let me talk about it. And this is whether or not I had a termination. Let me talk about it. And this right here is where I took my entry, and this is where I'm going to take my exit. And guys, all I need you to do is tell me why. Tell me what you see. Why did you enter? Why did you exit? And what you're doing is every time you write this on the chart, guys, is you're creating a story that you can come back and study. You can say, this is what I saw, and this is where I saw it, and this is why I did what I did. And we're not doing that to give you busy work. If you take it and click copy, well, then you can put that picture into the room. You can come over to the room, drop it in, and say, hey, Mark, let's talk about this. And if you click the upload button, it'll literally drop it into a cloud. And you can copy that link if you didn't copy paste, and you can put that in the room. And you can say, hey, Mark, this is what I did and why I did it. Can I do it better? Work with me. And then you're going to take that picture, that link that you just copied, and you're going to bring it over to your spreadsheet. And that's the second part, guys. Use this spreadsheet that Nexgen gives you. It's got 4 tabs on it. I'm going to drop mine in the room right now. Mine's a little more in depth than yours, but you need to take that link and drop it in here because you're going to come back and study this. And this first tab is your trade journal. Everything that you do, put on this first tab. And you know, if we had like this little honesty session and I asked you guys that have been with me for a week or two, hey, how many pictures do you have in this tab? Most of you are going to say 0. Most of you are skipping this step. I skipped it too. It felt like a lot of work. But what you're doing is every time you post a trade in that room, you're going to come back and study it tomorrow. So if you take 3 trades today, you have 3 opportunities for growth tomorrow morning before you ever start trading. And every day you're going to go back and you're going to ask yourself, what worked? What are the patterns that worked? What are the advantages that work? What are the entries that work? What are the exits that work, right? Because we want to repeat that process. We want to repeat that behavior. The better you annotate your chart, the easier it becomes to repeat the behavior. The more you write your rules, your thoughts on the chart, the more information you have, and you're like, this is exactly what I need to repeat. But you're also going to ask yourself what didn't work. You've got to ask yourself, did breaking this rule ruin my day, right? Did fighting this trend, did trading into this termination condition? So you put yourself in a mindset right at the beginning of the day. This is what I'm going to focus on for success, and this is what I'm going to try to avoid because it seems to be robbing me of success. Do this every morning, guys. It's going to set you up for the day. It will accelerate the learning. And the cool thing is there is a section where I'm going to give my 2 cents on everything that you post. Take that feedback, put it in there, because what I found when I was learning the software is I would do things and I would think that I was doing them well. Really did. I was convinced that I was nailing every rule and doing everything right. And then when I presented in the room, my brother was teaching the room at the time. He'd go, Mark, all right, I noticed that you took this trade, but you traded directly into an area that may stop the market. And you probably didn't notice it at the moment because all the adrenaline. Let's point this out with absolutely nothing moving. Let's point this out with no emotion involved. And this is how you avoid it. And this is what you have to wait for. And what it did is that feedback that I got in the room really took me next level. So guys, post in the room. Take advantage of it. You can't post too much. You can't ask too many questions. If the question's already been asked, I want you to ask it again. I'm going to try to find a different way to say it so that it clicks for you. This classroom becomes pretty amazing from the participation from you guys. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade, guys. We're going to go through those 3 rules. We're going to build a platform. We're going to become chart readers. You guys simulate, practice. You're going to make mistakes on simulator. You're going to break rules on simulator. You're going to make horrible decisions on simulator. If you post them in the room, we can talk about them, and it becomes a catalyst for growth. If you keep mistakes to yourself, if you hide them, if you're like, oh man, I don't want to post that, everyone will know that I'm not great in my first week, guys, you're going to stay exactly where you are. You're doomed to make the same mistakes. We've got to learn why they're mistakes, so put them in the room. And we want you practicing the correct rules. Because when you get lucky on simulator, that luck rarely translates when you go live. And it really sets you up for some long-term failure. We're going to simplify. I'm going to introduce you to the high probability trend trade. We'll look at trades beyond that from your charts, but the high probability trend trade is the focus. You have to know what looks you're going to commit to, guys. That's where the spreadsheet comes in. Because there's a whole section dedicated to the high probability trend trade. I'm going to give you a plan to become an awesome chart reader without ever having to take a trade. There's a whole section dedicated to you building a trading plan. And then there's the area where I've done quite a bit of work for you guys, where there's about 300 plus trades that you can look at that are annotated that revolve around advantages. There's entry sequences for the high probability trend trade. There's management for the high probability trend trade. There's next level management. There's patterns. There's terminations. Guys, your goal, brand new users, is to take what I've done for you here and take so many pictures that your tab looks exactly the same. And if you do that, if you put the work in, you're going to get to where you want to be. And there's people that come to this class that come back after a while and they're like, man, I struggled so much trying to do it myself. And now I'm going this way. And now I'm following this simple plan of posting and asking and taking feedback and studying. And guys, I watch people get better every day. I watch people um, just absolutely amaze themselves with what they're pulling off. But you got to keep it simple first. Um, so we're going to learn the rules. Guys, practice. Break some eggs, right? Mess up. It's totally cool. Simplify, 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 simplify. You have to know what it looks like. And the easiest way to find a live trade is to know exactly what your trade looks like when nothing is moving, to know exactly what your trade looks like when there's no pressure of winning or losing, to know exactly what the conditions look like with no fear. Because this look after the fact is exactly what it looks like in the moment when it's time to take the trade. That's it. And I love this. I keep looking for this trade because this is in this is in your spreadsheet about when to hold for a longer trade. If you look at this right here, this was an example in class where this says, hey, hold that trade. You're developing a management plan. And that was the end result of that trade. That was a fun one to take. So guys, we're going to go through. We're just going to create recognition through repetition. And we're going to do it with a high probability trend trade. We're going to keep it simple. We're going to focus on 2 charts, guys. That's it. 2 charts. Big chart, little chart. Large crowd, small crowd. The people that move the market telling us everything we need to know to look for an entry, and then a smaller, faster chart to find that entry. And then we're going to focus on only 3 rules right now. And whoa, man, I'm going to tell you, you're going to want to make it more difficult than it needs to be. We were talking about this yesterday. Elon Musk in an interview said, engineers are notorious for trying to optimize something that shouldn't have ever existed in the first place. New day traders are the same way. If this is good, let me add 5 things and make it better. And it's just not the case, guys. Everything we do is a pattern, and the pattern provides a statistical advantage. And you can either follow the pattern, momentum, clear path, and an entry area, and have the highest chance of success, or you can deviate and drop your chances. I'm a firm believer that I want the best chance of success, and it begins with strong triggers on the large chart. This is rule number 1. Strong triggers on the large chart, guys. So when the large chart is green, it's going up. Go with the flow. When the large chart is red, it's going down. Go with the flow. The only way that you can have strong triggers is if both the small triggers, these solid lines, and your the large triggers, these dashed lines, they both have to be green, the same as the background. And if the colors don't match, you don't have strong triggers. How easy is that? Strong triggers means that your small triggers are up and above the large triggers. Space is created between the two. I've got a lot of new people in the room today, so we're going to draw some pictures and have some fun. Strong triggers, I want you guys to picture this. Let me get my pen out real quick. Strong triggers, I want you to picture scissors. Oh, that looks like Pac-Man, so we'll give it a handle. When scissors are open, you can cut, right? When scissors are open, you can get work done. So strong triggers, whether it's an uptrend or a downtrend, I want you to picture scissors open. I want you to picture small, separated from the large, space between the two, and those scissors can cut. You can get work done, guys. Strong triggers is that opening, that gap, and that strength means that the odds are favorable for the market to continue up in an uptrend, or that the odds are favorable for the market to continue down in a downtrend. And I'm going to tell you that there are an awful lot of trading plans that revolve around the idea that momentum is a great advantage to have. Momentum pushes the market. Momentum can break key Fibonacci areas. Momentum will even cover mistakes that you guys are going to make as new users sometimes. And when I have strong triggers up, when the odds are favorable, I'm going to buy Fibonacci support on a smaller, faster chart. This one bar, from the top of the bar to the bottom of the bar, inside of that bar is an entire retracement. and a move back up, you guys will be able to pinpoint where this tail is most likely to form. This becomes your entry for the highest probability trend trade. When the strength is down, you'll be able to pinpoint exactly where the top of that tail is most likely to form using a smaller, faster chart, and this becomes your entry for the highest probability trend trade. I'm going to show you guys how to study, how to go back, how to validate and verify this methodology historically without ever having to take a trade, committing the looks to memory. So strong triggers, guys. It's not an all-day endeavor. Let's go to my large chart right here. You know what? Let's pull up crude oil because it tends to flow a little better for this lesson. So I'm going to pull up crude oil, and there it is, live in the moment. Small triggers are below the large triggers. Large triggers are wide, smalls are wide. So Pete, we're looking for momentum on the large chart. So this is going to be my 13-2. Momentum is defined on the large chart. And thank you for asking that question because it's going to pull me back to this right here. Your large chart is going to define direction. Your large chart is going to define momentum. And your large chart is going to define the trouble spots that we're looking for. So on the large chart, can you guys give me a Y in the room if you see it? This is the most current bar. Small triggers are below the large triggers are wide. That gap between the two lets me know that the odds are favorable for the market to continue down. This is what it looks like in a live market. And guys, check this out. There's one of those tails. I'm going to circle this. And we're going to come back to it in a little bit when we talk about entries and we're going to see what happened. If I scroll back, there's strong triggers. Guys, there's one of those tails again. There's still a circle from yesterday's lessons. There's strong triggers to the upside. Look how it pushes. Look how it breaks key areas. So your goal as a brand new user, guys, is to start snapping pictures. So I'm going to use capture and I'm going to click on it. And I don't even need all of that picture. I'm just going to take this right here. And this is how you're going to get to where you want to be. This is the first study lesson for you. Take this arrow, click and drag, and drop it right in the middle of those triggers that are open and wide. Take your call out button, click and drag, make a big box, and say smalls below large, all triggers, background, red. This is strong triggers. This is odds favorable, momentum. This is rule 1 met. So what did I do? I described the look because you've got to learn the looks to make them easy. I described what this means to me. This is strong triggers. My advantage is momentum. This is rule number 1. And I'm going to take this picture and I'm going to click the upload button and I'm going to drop it into the cloud. And I'm going to open up my spreadsheet, guys. And here on 101, there's an entire section dedicated to strong triggers. I'm going to put it in here. I'm going to use a hyperlink because it's easier. And I'm going to put strong down. And what happens is if I take this picture 10 times today of strong triggers, by the end of the day today, I'm never going to miss strong triggers. I know exactly what it looks like. I know exactly what it means to me. I know exactly how to recognize it. And I'm going to be able to recognize that advantage each and every time I look at a chart. So strong triggers, guys. This is the one that I don't forego. Strength creates opportunity. The best of the best time to sell Fibonacci resistance on a smaller, faster chart. But as the move moves down, guys, the small triggers begin to work inside of the large. One line goes inside of the large. This is visually telling you, hey, your momentum is slowing. You can still take short trades when you're comfortable reading your charts, when you can look at both charts and be able to define advantages and say, even with a slowing move, there's enough going on to still sell Fibonacci resistance. And then when those small triggers continue down, and both small triggers are inside of the large triggers, you have a weakening or a slowing of the trend, anything can happen up or down. Anything can happen up or down. Let that rattle around in your head for a second, guys. Odds favorable, anything can happen. Which one are you betting your kid's college fund on, right? And these weak triggers, you'll get to a point where you're still taking trades, but you're going to let your chart reading manage these things aggressively. You have to be a chart reader to be able to manage these, to get in, get out quickly, and still capitalize. And when those weak triggers hit areas, guys, these areas are more likely to hold. And that's kind of your little segue into the next lesson. But I want to go back one more time, guys. Give me a why. Strong triggers, scissors are open. When those scissors close, if you ever tried to cut paper with closed scissors, you can't do it. Best thing you can do is maybe take a stab at it, right? So commit. Commit to that awesome memory. Morgan, are you posting videos in the room? Those are tough for me to open. And guys, that's rule number one. And rule number one happens on the large chart, the Backstreet Boys. I'm about to ban you from the room, bringing Backstreet Boys in here. So guys, your large chart, check it out. Most current bar. We've defined the direction of the market, and we have defined the momentum of the market. And we are one rule into the highest probability trend trade. We now have the advantage of momentum. So now we're going to let the large chart define our areas, guys. And we're going to do that by saying no termination conditions. Termination conditions false, because when there's no termination conditions, no areas that are likely to stop the market, well, then I'm going to have room to my profit targets. I will have a clear path. Once again, large chart. These are lines on a large chart, guys. Don't overthink them. Don't rank them in terms of strength and which one is more important. These are lines on a large chart, and we're looking for divergence highs, this magenta line that prints from a loss of momentum at a pivot. Divergence lows, you'll see the same loss of momentum illustrated through a cyan or a light blue line. We're looking for red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s, and sometimes we're even looking for these mid bands if the large triggers aren't playing along. But what happens is these lines are where the people in charge, the people that move the market, the same people that react to that news, these are where decisions are made. These are where buyers are buying and sellers are selling and profits are taken, and where fights happen between the two forces. Pete, I'm going to do two things here. I will define the 1-to-1s because you asked, but I'm going to tell you 100%. Pete, do you need to know how to build a clock in order to tell time? That's like the biggest cliche ever, but it's so true for what we do. I don't have to know what a 1-to-1 is. I don't have to know how it comes to be. I don't have to know any of that to know that if price reaches it and my triggers stay below, it could screw up my good time. But here's your picture right here. 1-to-1s, it's a 100% Fibonacci alternate. Your software does all the calculations. It knows which pivots to use, and it projects forward. And this is almost like a Fibonacci area that is created in the moment, Pete. So when you have 1-to-1s on your large chart, where's my large chart? When I have 1-to-1s on my large chart, what it's doing, let me see if I can find one, is it's like a fib that prints right in the moment. It's a Fibonacci alternate, 100% Fibonacci alternate. And it's taken from these swings, and it'll project where that 100% alternate is. And what is just a truth in trading is that there's people and algorithms and those trading bots that use this measurement. So your software prints them out, allows you to see them, and then I'm about to give you a simple little recipe to know when they might be problematic. Does that help? And Pete, I'm not sure how long you've been with us, but I'm the most tech illiterate guy in the room. And I don't know all the math that creates the moving averages and stuff like that, but I can teach you how to use them to your advantage. But I know that I do have engineers in here, and they need to know the whys, so I'll always get them for you. But what you really need to understand is that these lines on a chart can create trouble. They can create a problem. They can create a fight that you can't trade through. Exactly, Pete. That's about the man. You just killed my clock analogy, and we're going hot dog analogy forever. Thank you for that. With chili. So guys, we're going to use the trigger lines. The same trigger lines that establish momentum, right? We're going to use those, and they're going to let us know if these areas are likely to stop the market. They're going to let us know if these areas have the potential to break, And the trigger lines are going to let us know if the areas are broken. And we're going to do that with the most basic recipe I can teach, guys. If price reaches an area, and when I say price reaches an area, what I'm talking about is if these dynamic Renko bars come down and smack headfirst into support, the only thing that you have to do as a brand new user is ask yourself, let's get rid of all of John Novak's stuff here. Price reaches an area, and why do we do that? Decisions are probably going to be made. The sellers may exit their position. The buyers may try to enter a position. But I'm telling you guys, if you scroll back on your large chart, you will be absolutely floored at how often the market bounces off of these. So once price reaches support, I want you guys to embrace this phrase. Where are my triggers? That's all you have to ask. Price made it there. Where are my triggers? If both the small and the large are above support, don't go short. You don't know what's going to happen. It's a termination condition. It might break. It might bounce. There may be a fight that lasts for the next 3 days. Hell, I don't know. But the reality is if price reaches support and those trigger lines remain above, guess what? No more short trades. Don't trade into the area. Be okay with the idea that 90% of your day is waiting for advantages. Is everybody good with that? That is the basic recipe for termination conditions. Whether it is support or whether it is resistance. If price pulls back and reaches support and the triggers remain above, don't go short. It may stop the market. And guys, it did. And let me just slide this box over. If price reaches resistance and the triggers remain below, don't go long. It might create an untradeable bounce. And we're watching it right now, right? Those one-to-ones stopped it cold. Resistance made a bounce. Divergence high line pushed it down. Support held it. Scroll back. Support holds. Resistance stops it. You're going to be absolutely floored at the advantage that rule number 2 creates for you. And it's not necessarily putting you in a trade. It's keeping you out of a trade. It's telling you, hey, that advantage isn't present anymore. So if price reaches an area, the triggers are above support, below resistance, sit on your hands and do nothing. And then if I can't go short at support here because the triggers are above, and I couldn't go short at support here because the triggers were above, what does it mean to have it broken? It means that when the small triggers and the large triggers, both lines of both triggers, get below support, support is broken. The area is broken. The path is now clear. And I'm looking for momentum. And if I have momentum and I have that clear path, I'm going to be able to pinpoint where this tail is most likely to form. I'm going to be able to pinpoint my entry for the highest probability trend trade. So as a brand new user, I want you guys to keep it simple. Either you have a clear path or you don't. This is the easiest way to get to where you want to be. But there's going to be a third option. There's always a third option, right? And that third option, let me pull my picture back up, is what we call a 50-50, which means that my small triggers have absolutely smashed through the problem area. And let's draw a box around the problem area. But my large triggers, those slow-moving triggers, are still above. And what this means is that 50% of my triggers are below the area that may be problematic, but 50% remain above. We very cleverly call this a 50-50 trade. And that's not a reference to your odds, guys. You could call this a straddle trade or a one above, one below trade. It doesn't matter. But what you need to know is that when the triggers haven't broken, but the smalls are through and the large are not, all that momentum, and it takes odds favorable momentum, this area has the potential to break, but it's not broken, which means that it's not a clear path, which means that it could never, ever be a high probability trend trade. So you're going to see these potential to break all the time. We just watched one in crude oil, I think. With all of that momentum, It has the potential. With no triggers, we don't know. It's okay to not know. But when the small and the large get to the other side of resistance, resistance is broken. It behaves as support. I'm looking for my rules to be met for high probability trend trades. Is everybody cool with that? Termination, 50-50. I'm going to give you a plan to take this one. But clear path is the best of the best. And this is when we're looking for those rules to be met. Your ability to read charts is necessary to really be able to take advantage of this potential to break look. So one more picture, my favorite picture. New users, I'm pretty sure I said it, but I'm not sure. If I didn't, I want to remind you. I'm not even going to leave that up there. 90% of your day is spent reading indicators and waiting for your advantages. 10% of your day is trading. You are professional waiters, ladies and gentlemen. And the better you get at waiting, the easier your day is going to be. Because in this case, momentum is screaming to the downside. And it smashes through Fibonacci support. And when it got there, every one of you said, you know what, let's see what happens. Let me give it a second. And it just kept going. And it went headfirst into these yellow 1-to-1s. And when it did, everybody in this room asked themselves, where are my triggers? And all of my triggers were above these yellow 1-to-1s. And you said to yourself, man, I've lost the advantage of a clear path. I don't think I'm going to take a short trade. Is everybody with me on this? Price reaches the area, the triggers remain above, and each and every one of you has the ability to say, I choose not to trade into this area. And you know what it did? Is it kept you out of a loser. And then price retraced all the way back to resistance. And when it hit resistance, do you notice that all the triggers are still below? Which means that I have a termination condition above me, and I have one below me. I'm in that 90%, guys. And then my trigger lines don't match one another or the background, which means that I don't even have rule number 1 met. I'm still in that 90%. My triggers are still below. They still don't match. And then price reaches this mid band up here. And you're saying, man, I've got the potential to break. The momentum looks good. And I reached a mid band. If my large triggers are a full bar away, this mid band is also behaving as a termination condition. This is what we call the gap theory. If price reaches a mid band and the large triggers are a full bar away, don't trade into that mid band. It might stop the market. So we're still in a holding pattern, guys. This is your 90%. This is the most boring 45 minutes of your life. This is where that devil on your shoulder is going to tell you, hey, Mark, just try one and see what happens. And then suddenly I'm down $250. You know what? If that one didn't work, Mark, the next one's going to work. Your rules aren't met, but we really think it's going to go down here. Let's lose another $250. You know what, Mark? You can't possibly lose 3 in a row because you're kind of a big deal and children sing songs about you. And then my opinion takes me to that third loser, guys. And by the time this happens, no rules met, three trades taken. I'm starting to get a little dejected, a little upset. I'm not happy with myself. I hate the market. And frankly, I'm getting a little pissed at Nexgen, right? And then something magical happens. If I didn't take the trade, if I didn't give the money away, suddenly I have momentum and a clear path. And rule number 3 gets me into the market right at the base of that bar. And I ride that wave of momentum up to Fibonacci resistance. And suddenly it's the easiest trade I've ever taken. It's stress-free. The market never even blinks. And my highest probability trend trade comes to life, guys. And very much, what you don't do when there's nothing to do is going to determine how much you keep when you're following those rules, when you're trading those advantages. Pete, did you say that crude bounced off of a fib? Well, that's a divergence low, right? And I'll be darned. Look at the bounce, guys. That's a termination condition, textbook. So, Pete, what you've just pointed out is rule number 2, saving your bacon. What you've just pointed out is rule number 2, saving your bacon. And check this out, guys. How cool is this? Oops, that's the wrong one. If I change the color of the fib, and I did this in a little lesson that I put together yesterday. If I make this fib white, right? If I make this fib white, you can see the life cycle. Price reaches it, and the triggers don't break, and there's nothing for me to do. It doesn't matter if the fib is blue, if it's red, if it's green, if it's pink, if it's purple. Trigger line's defined. When the smalls get through, but the large haven't, it has the potential to break, and break it did. And then once small and large are through, the path is clear. And guys, that's really how easy it can be. No trade. If everything's perfect, take the trade. The path is clear, look for the next trade. And it's that little bit of patience, that little admission to yourself that I just don't know, right? I don't know if there were a bunch of buyers waiting at 79.61. I don't know if the sellers were only trying to get to 79.61, but I have that very simple lesson that says, if price reaches it and the triggers are above, don't take that short trade. And right now it's paying dividends for each and every one of you live in the market. Pretty cool, right? And remember when I told you that if you enter the market and you become a chart reader, you'd understand where the market is likely to go? Guys, if you took a short trade, the market was likely to go right to that trouble spot. What a great spot to take an exit. Pretty cool, right? And this is what we're doing. Well, it hit the mid-band, Morgan. Didn't it? In this tiny little small insignificant chart, gave a down bar. But look at the fluctuations on the small chart, guys. Let me show you, as we go into rule number 3, let me show you why we use the refinement chart. I want you to see all of this motion on the small chart. That box goes around 1 bar on the large chart, guys. This is the refinement process. 1 bar said down, 1 bar said strength, 1 bar said potential to break. Guys, there's the fight right at a key area that you'll see on the smaller, faster chart. This is why we only use the small chart for an entry when the rules are met on the large chart. So great question, Parker. When I click on the drawing tool, it gives me all of these options. This particular one, I use the rectangle. I typically don't like drawing on my NinjaTrader because too many, it creates a layer every time and it creates stress on it. But if you wanted to, any one of these work great. You can use an ellipse, a rectangle. I've never used a triangle. Oh, it actually makes you draw the triangle. That's pretty cool. And then if you want to format it, I did bright yellow because it's easy for you guys to see. You can double click and you could actually, like, I could make the inside white, right? And now it's got a little more contrast coming through and it goes back and forth. So the drawing tools are available to you. And then there's also drawing tools on the capture software. But guys, do you see how all of this happens inside of that 1 bar? This is a big reason why we don't trade tails. This is why we're able to pinpoint with unbelievable accuracy where the market is most likely to continue. And we're going to get there in 1 second. But I need you guys to give me a why in the room. If you are okay with the idea that if price reaches a line on a large chart, I'm not even going to say fibs or resistance or anything like that. If price reaches a line on the large chart, you're going to use your trigger lines to determine whether it's likely to stop the market, whether it has the potential to break, whether it's broken. Only one of these puts you into a high probability trend trade. Lines on the large chart can create problems, ladies and gentlemen. We're going to use lines on the small chart to enter trades to have a bounce point, but there's one termination condition that I'm going to respect, and this is the only one. Why, Mike? Why are you giving yourself the burden of so many charts? You do whatever you want. But I'm telling you, you don't need it. You don't need it, not yet. This is, I like it. That's too many minds for me, personally. You guys do whatever you want. I will never, ever, ever, ever tell you guys how to trade. I will never tell you what charts to look at. I will never tell you where to enter, where to exit. But what I will do, and what I've been doing for years, is I'll teach you how to keep it so simple that it's almost hard to screw it up. And Iron Mike, you can always do whatever you want to do, right? But if you post in the room, I want to see all of your charts though. Because what I find is that people love to post more charts and ignore them or not use them properly. No, don't get rid of it. Watch it, follow it. But know that you can do what you need to do with two charts. And then, Mike, what I do is I'll take my trades per the rules, and then I'll go back and I'll look and see what the other chart said when my rules were met. And that's how plans develop. But I always encourage people, get really good at one thing before you try to add the second thing. So what is divergence, guys? Divergence means that price goes down and back up, creates a pivot, right? Or price goes up and back down and creates a pivot. That's not divergence. Divergence is a loss of momentum at that pivot. There's a calculation that runs in the background. And Pete, this one's for you, brother. You ready? Are you still in here? Did I lose him already? Man, all right. For the must-know people, right? I'm going to go to the glossary of common terms again. Guys, here is the too advanced for my brain version of divergence. Your software in the background takes pivots and momentum indicators and does math and calculations and all sorts of different stuff to tell you that there was a loss of momentum. The cool thing is that I don't have to know any of that. If I see a negative number and a cyan line from a low, or a negative number and a magenta line from a high, guys, there was a loss of momentum. That's all it is. So back in the day, Pete, you had to keep eyes on both and do the math and all that stuff. And you'll see older users still using them. We've pretty much gotten rid of the need to do that. Because if you're not real visual, it becomes difficult. But a negative number, and guys, the number doesn't mean anything. It's a byproduct of the calculation. This lets me know, and this is the easiest way to think about divergence, guys, and I don't want you to overthink it. It lets me know that momentum didn't follow price, and it lets me know that momentum didn't follow price. And I don't know that until about the third bar up or the third bar down. So anytime you see divergence, all you have to say is, hey, there was a loss of momentum. I'm not going to give it any more power than that. But if you see three divergences in the same price range, if you see three losses of momentum in a low, so right now, Debbie, we're looking at a small chart. Right now, we're looking at a small chart. This is the only time where I'll let a small chart tell me that rule number 2 isn't met. Everything else that we've talked about has been large chart. But because the large chart is a slow moving chart, because the large chart isn't going to show you change quickly, Debbie, we can use the idea of three divergences on a smaller, faster chart. Do you remember that? Were you just here for that box that I drew around the small chart? All of this information that was just one bar on the large chart. So we're going to use that small chart, three divergences, to say, hey, things may be changing. No more short trades. Or, hey, that momentum's gone. No more long trades. So three divergences may stop the market. Three divergences with weak triggers, the exact same lesson. Kenan, we got to figure out how to keep you in here longer. Do you have any charts that need review? And guys, I'm going to say this to Kenan and the rest of you. If you ever have charts that need to be reviewed, but you have to leave before I get to that point, you have to just tell me, hey, Mark, I need you to check these out before I split. And I always will. I will always pause class and go to your charts and make sure you get the feedback that you need. Awesome. No worries. San Diego. I'm going to come out. We're going to play golf. I love golfing in San Diego. You know there's really strong teenagers that'll pick up all your heavy stuff and move it someplace for you. I've gotten to that point in my life. So, guys, three divergences might stop the market. Three divergences with weak triggers, the exact same look from rule number one, makes it a little more powerful. And then when I get a third divergence higher than the second from a low, or lower than the second from a high, this is a head and shoulders pattern. This adds fuel to the fire too. So Debbie, to kind of backtrack a little bit, I'll see this look on a low or this look on a high when that large chart isn't moving fast enough to give me that information. So I may have odds favorable momentum and a clear path to the upside, but three divergences on a small chart says, hey, Mark, don't take that long, dude. It's less likely. Yeah, we were, Ron. That's why I can't stand up in the morning anymore. Right on, kid, and have a good one, brother. And it may help you see when that clear path isn't going to make it down to that next area. So, guys, three divergences on the small chart is the only termination condition. You will see this look on a large chart. Oh, no worries. Well, then good. Then this was your lesson, Debbie. You will see this on a large chart, but when you see it on a large chart, it's even more powerful. But it takes quite a while for it to develop on a large chart. So we're in that two chart process still, right? Large chart has defined momentum with strong triggers. Not going to circumvent that. Large chart is going to use lines to let us know where there may be a problem, where I may need to pause, where I may need to pump the brakes, where I shouldn't take that next trade into the area because that area might stop it. And that's large chart lines, guys. And we're going to use lines on a small chart, fibs, mid bands, yellow, 1-to-1s, but they're going to have the same effect. They may create a bounce, but they're going to give us a bounce in the direction of our trade. And we're going to use that refinement chart to pinpoint where the market is most likely to continue. The precision is pretty outstanding, guys. And the reason we're using that smaller, faster chart is because the large chart's the people in charge. They're not you or I. We are not, you or me, excuse me. We're not the people pushing the market. We're not creating trends. We're not establishing momentum. Hell, we're reacting at areas, but it has no significance on the big picture. And the small crowd, this guy borrowed $1 million from his uncle, and he's a yahoo. He fights everything, or she fights everything. Let's not just put this on the men. And they create these little pushes, these little retracements counter to everything going up. And guys, we're going to take advantage of the small crowd with rule number 3, and you're going to pinpoint your entry. So rule number 3 says that I'm going to use a limit order, which means that I can literally wait for the market to come to me. I don't even have to chase money. It's going to come to me. And I'm going to use a limit order to buy or sell the pullback, that little shove from the small crowd. And I'm going to have that limit order waiting in an area, fibs, mid-bands, yellow, 1-to-1s, right? And they're going to be tucked inside of triggers, guys. So it's pretty wordy. I'm going to use a limit order to buy or sell a pullback, that little shove caused by the small crowd. And I'm going to do it at an area, fibs, mid-bands, yellow, 1-to-1s. And that area needs to be inside of triggers. And there's 2 trigger looks that you're going to see on your small chart. And before I go into that, there are large triggers, the smooth triggers, and there are synthetic triggers, the step triggers. The step triggers are nothing more than large triggers on a large chart. That's it. We say synthetic because it means that it got pulled from the large chart and put on the small chart. Trigger lines, guys. Large trigger lines are a correction point. They're a moving average. Price comes back to these triggers all the time. It does it on the large chart, returns to the large. It does it on the small chart, returns to the large. So we're going to use the idea that when the large and the synthetic are overlapping one on top of the other, what you've done is you've eliminated having multiple correction points. When these triggers overlap one on top of the other, 2 snakes riding piggyback. Guys, this is the best of the best. This is where we expect price to come back to. I'll cover that for you, Rob, in just a minute. We do not trade the trigger lines because they're just moving averages, right? It's an equation. We give them something solid to bounce off of. Fibs, mid-bands, yellow, 1-to-1. So when these favorable large triggers, one on top of the other, there's the least amount of space to shoehorn in fibs, midbands, yellow one-to-ones. We expect these areas inside of favorable large triggers to create a bounce when the rules are met. And the further apart your large and synthetic are, the more indecision there is about where the market's going to correct. The more challenges you have being accurate, the more risk you'll ultimately have on a trade. So brand new users, embrace the idea of favorable large triggers. And then this comes back to, we don't trade tails, guys. When the market is right here, when the momentum is strong, when the path is clear, that's the beginning of your pullback. That's the small crowd. This is where they're going to fight. Avoid temptation. You guys love to jump in. You're waiting for the reversal bar, guys, but the reversal bar is not your entry. The reversal bar signals the beginning of a pullback. Well, Rob, you're about to get a lot better today. We're going to cover that, I promise. So the reversal bar signals the beginning of a pullback. The reversal bar is not your entry for the high probability trend trade. Good morning, Miss Cindy. The reversal bar says, hey, the small crowd is fighting. Let's see if they can push down. So when I get this reversal bar, I'm going to find my triggers, large and synthetic, one on top of the other, wide, angled in the direction of the trend. This red box shows me where the triggers are. I need to look inside of the triggers for areas, fibs, midbands, yellow one-to-ones. I have a midband and I have yellow one-to-ones, and notice that inside is capitalized. I expect price to come to the triggers, but I'm not entering at the triggers. I'm giving it something to bounce off of. So fibs, midbands, yellow one-to-ones. Guys, this blue box is the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. This is your window of opportunity. This is where the market is most likely to bounce. This is where your highest chance of success is going to come from entering the high probability trend trade. Your job is to activate a limit order right at the top of that window and say, if the small crowd can push to this point right here, I'm going to enter the market where the market is most likely to continue. It looks exactly the same on a short trade. It begins with a reversal bar, but the reversal bar is not your entry. You identify your triggers, but the triggers are not your entry. Then you identify areas inside of the triggers, not above the triggers, not below the triggers, but inside of the triggers. And this one line, this one midband inside of favorable large triggers is the point where the market is most likely to bounce. You will activate a limit order just below that and hope for the best. At that point, you've done everything that you can do. And guys, we're not trading the tails on the large chart. We're trading pullbacks to resistance inside of favorable large triggers. Pullbacks to support inside of favorable large triggers. But we're going to use this tail as a study tool. If I go back historically and I circle a tail and it lines up with an area inside of favorable large triggers, well, now I've got a picture of the perfect trend trade. I'm going to make sure that gets into my spreadsheet. And then there's an old adage, if you will. The sign that you're maturing as a trader is that you manage your risk before you manage your profits. Guys, we manage our risk by having odds favorable momentum, by having those strong triggers. And we manage our risk by not trading into areas that may stop the market. And we manage our risk by pinpointing exactly where the market is most likely to continue for this highest probability trend trade. Before we ever enter the trade, we've already worked hard at managing our risk. Well, once we're in the trade, that management doesn't stop, guys. If I know where the market is most likely to continue, well, then I also understand where that advantage is lost outside of the window of opportunity, beyond that point of correction. So generally, 4 to 5 ticks above the trigger lines, right where the market shouldn't go, is where your initial stop placement is. And if the market goes through that window and hits that stop, you're going to exit a trade. And this is where feedback in the classroom becomes really important, guys, because the problem with believing you know what's going to happen means that you set yourself up for disappointment when it doesn't happen. So when I have momentum, when I have a clear path, when I enter the areas inside of favorable large triggers, this is a pattern. just a pattern that has been proven through study to win approximately 70 to 80% of the time. So you math whizzes, help me out. Anything that wins 70 to 80% of the time, does it stand to reason that 20 to 30% of the time the market is going to be wrong? That 20 to 30% of the time the small crowd's going to be able to push through and hit your protective stop? That 20 to 30% of the time it's okay if it doesn't go where it's supposed to go, because if I take this trade 100 times, I can expect to lose 30 of them, but I can expect to win 70. I have the potential to win 70. So what I have to do is I have to get my mind right at the beginning to be okay with the 30%, to be okay with the idea that not every trade is a winner, that I'm not in control of that. The only thing I'm in control of is whether or not my rules are met, and my rules have been proven to win more than they lose. And guys, this is what makes successful day traders. Not the result of this trade, but rather the belief that entering the market where it's most likely to continue with all of the advantages puts you in a position to win more than you lose. And you never hesitate, which is why I tell new users, take 20 days to learn how to get in. You're going to be able to see this trade within a week if you're keeping it simple. Take 20 days learning to pinpoint where the market is most likely to continue, and that's going to set you up for this first step of management. With all of those advantages, guys, you're probably going to get a reversal bar in the direction of the trade rather than an immediate stop out. When you do that, you can reduce your risk even further, a couple ticks above or below those reversal bars, and it's not uncommon to see you guys take a trade that fails. And guys, trades fail all the time, but only lose 30, 40 bucks because you're so precise with your entries, because you're so good at understanding where it should continue that you're not willing to sit and hope in a trade, because you've studied, you've gone back, you've looked at it, and you take a small loser and you wait for the next best opportunity, guys. And that is exactly what we're doing. So I want you to see this. Dun, 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 dun. We'll go back to this one. And I'm going to do it. And guys, I'm going to take all the noise off of this chart because we're only talking entries. And some of you guys are going to go, but Mark. All we're going to do real quick is we're going to identify the window of opportunity together. Are you guys okay with that? And new users, this is a great way to do it. So let's start on the large chart. The trend is down, right? And watch this. We'll even draw in a fib. The market is coming from resistance. We can do anything we want, guys. It's make-believe. The market terminated. It reversed. Guys, this is a strong top. Any termination that the triggers don't get through, this is it. Draw your own line so that it fits the rules. You know what, Morgan? What you just did is you just fueled the fire for people to go, this is bullshit. He's making it up. So I'm going to put my indicators back on there. I'm going to put all my indicators back on there. Do we have momentum? Pretty simple, right? Small is below the large, larger wide angled in the direction of the trend. Is rule number one met? You have to be able to answer this. Or rule number two becomes problematic. I have the advantage of momentum. Can everybody see that with small triggers below the area, but the large triggers above the area and all this momentum, that 80.05, this area right here, has the potential to break because of that momentum, because of my trigger line locations? Is everybody good with that? Awesome. This is what your small chart looks like when this is going on. So I have to wait for the small crowd to do their thing, guys. And watch how this works. This is the I'm not in a trade and it's going down. Everything says short, but it's there. Where's the reversal bar? Oh man, I'm not getting paid. This is horrible. Let me jump in right here. Let me just go ahead and jump in right here because you know what? This sucks and I want to get paid and I'm not getting paid and the market's being mean and this is horrible. And then it bounces and you get taken out. And you're like, oh man, I didn't make any money. I can't believe I just jumped in. But you guys waiting on a trend trade said, hey, look, there's a reversal bar. So when I get this reversal bar, I know that that's not my entry. And when I get this reversal bar, I know that I'm not getting in at the triggers. So what am I going to do? I'm going to look for areas inside of the triggers. And here it is right here, guys. This is your mid-band. If your reversal bar dissects the area, that's not your area for entry. Notice that your large chart says 50-50. Your small chart almost looks like a termination. Termination conditions are defined on the large chart. So Rob, when you have this momentum, the potential to break, you get the reversal bar. Where's the market trading? 79.73. Your job is to right-click on your chart. Sell limit.
Order submitted.
And now you have a limit order. And I'm going to put it 2 ticks below the mid-band. And my only option right here, guys, is to wait. Does that make sense, Rob? If you right-click above price, sell limit is your option. And I can't go below price here because this is historical. But this limit order is exactly where I want to enter the market. And this I'm activating it all the way down here. And the market starts up and I'm hopeful. And the market starts up and I'm wishing. And the market keeps coming and I'm like, man, come get me. Notice that your mid-band is continuing down. It's okay to click that line and drop it. And the market's coming up and coming up and coming up and coming up. And man, I'm in a short trade. I'm in a short trade with the advantage of momentum. I'm in a short trade with the potential for this area to break. I'm in a short trade at the point where the market is most likely to continue. And my rules tell me that my initial stop, that's 26, is right about here, 4 or 5 ticks beyond those trigger lines, beyond that correction point, beyond that window of opportunity. Is everybody with me so far? Your job is a brand new, no. Paul Flowers, what direction is the large chart going? The large chart's going down. The momentum is down. Everything says down. This is an area of resistance inside of favorable large triggers. Yeah, but the 5-1 is this tiny little fluctuation chart, Paul. Remember when we did this? Check it out. Remember when I drew this box? Large chart says down. Large chart says strength, right? This is just this little fluctuation on the small chart. You're in the trade. And at this point, there's nothing to do. You're either going to get stopped out or it's going to go in the direction of the trade. And there it is, direction of the trade. My new stop is 2 ticks above it. And watch all this nonsense, Mr. Flowers. Nothing but fluctuations. Do you notice how the large chart never stopped saying down? The large chart never stopped saying clear path or potential to break. The large chart never said anything except let's go short, Mr. Novak. If I get caught up in these nasty little fluctuations, I'm going to drive myself nuts. But it never hit my stop and this chart never changed. And it's still bouncing. And then down it goes. Is 2 ticks above the top of the small chart a pretty standard area? Once it goes in the direction of my trade, Morgan, absolutely. if I don't have a reversal bar yet, I'm up here where the market shouldn't go. Once it says, hey, Mark, guess what? We're doing everything that the large chart said we're going to do. Hell yeah, I'm going to reduce risk. Because at this point, it's doing it. Yeah. And notice how it never got hit. It danced, it fluctuated, it did all sorts of shenanigans, but it never did anything. And then here's the most amazing part and how you guys can study. Notice when I shrink this box to the tail on the large chart, it's right there at resistance inside of the triggers. So I can scroll back on a large chart and if I circle this tail, a lot of you guys made money on this one yesterday. Right at areas, right inside of favorable large triggers, guys. Right there, look at that. That is freaking perfect. So I'm not taking a trade, I'm going back and I'm taking a picture. And I'm saying to myself, and let's do this real quick. So historically, right at this bar, what direction is the market going, ladies and gentlemen, with that green background? It's going up, right? So let's go to my second rule. On this bar that I just circled, woo, hold on. Do I have strong triggers? What do you guys think? Yes. So on that bar that I circled, whoops, hold on. Right, the top of that bar. Did I reach resistance? Or is my path clear? No. So you guys want to know something cool? Is resistance up here is a target. It's not a termination condition because price didn't reach it. Oops, sorry, I lost my strong triggers. So I have strong triggers. I have a clear path. Guys, what kind of chart is my small chart? It's just an entry chart, right? And what are my entry rules? Buy a pullback at an area. Let's go all caps inside of favorable large triggers. Were my rules met for the high probability trend trade? Mr. Flowers, what do you think? Absolutely, right? Guys, this is your trade. And when the market isn't moving, there's absolutely no fear of loss, guys. You're just doing it historically. You're committing this look to memory so that you can catch it when the market is live, so you can process these things quickly. So this is a pretty good example, right? Favorable large triggers, one on top of the other. Split large triggers, 2 correction points. Do you guys think that it's a mistake or an accident that it bounced off the mid band at the second correction point? You could have taken this trade. Pretty cool, right? Same thing, guys, every day. So if you're brand new, don't put the horse before the cart. The first thing you have to recognize is the idea that you have momentum and a clear path. And then once you do, all you have to do is find an entry. And some of the common things are, and Paul, I think you said it, but the bars are going down, right? That's scary. But Mark, the triggers turned red. That's scary. If you believe wholeheartedly from a little bit of study that momentum, direction, and areas are all established on the large chart, then you don't get suckered out of talking yourself out of a trade because of a red bar or because of red triggers, right? Because this chart never blinked. This chart stayed true up, and guys, look at that. The momentum carried it all the way to Fibonacci resistance. And if you were in at 32, guys, and out at 75, that's $430 worth of profit all the way up. And if you didn't get suckered out of these fluctuations, if you didn't let a small chart scare you when the large chart led the way, you got paid. Pretty outstanding, isn't it? And look at where the market created a bounce. Right at Fibonacci resistance with the trigger lines below. So, guys, this is your high probability trend trade. This is my first hour every day, is putting you in a position where you can recognize this, where you can take advantage of it, where you can break it down individually and turn those individual pieces into a trade. And you're going to do that. You're going to do that. I saw you chicken out, Jen, by becoming a chart reader. So for Doug, for Luke, for who else is in here? Danfer, good to see you. I know I've got some newer people. For my Parkers, for my Malcolms, for all of these. All right, Jen. Coming back with a better description. How come you don't have a green box next to your name? I thought you owned software. So for all of you guys that are becoming chart readers right now, this is the fastest way to get to where you want to be. You have to recognize some looks, and you got to be able to do it quickly, and that's where repetition creates recognition. So this is where you got to take that camera, guys. You got to be a shutterbug. Take 25 pictures of strong triggers because you always want to be able to catch the advantage of momentum. But then take 25 pictures of weak triggers because you want to know when that advantage isn't present and exactly what it looks like. Take 25 pictures of a clear path so you know exactly what it looks like when there's nothing in your way, when there's room to your profit targets. Take 25 pictures of termination conditions, reminding you that when price reaches an area and the triggers don't break, that it's okay to do nothing. Take 25 pictures of that potential to break look because you're going to work your way into this. And then go back, guys, and find those pictures. Find those windows of opportunities and really line it up. Take the pictures so you know exactly what your entry looks like, right? And the task isn't just to take the pictures, guys. You've got to annotate your charts with the whys. Why is it strong triggers? What is the look? What does it mean to me? What rule does it correspond with? And I'm telling you, I promise you, from the bottom of my heart, if you take 25 pictures of strong triggers and you type out why they're strong triggers and you write odds favorable momentum on that chart and you say this is rule number 1, does anybody in this room feel like they're not going to have a pretty good grasp on momentum in a day? There's no doubt in my mind that you'll be good at it. Termination conditions are the same way. And guys, you can get, watch this. This is one chart. That's a termination condition. That's a mid-band with large triggers a full bar away. That's a termination condition. And that was a termination condition that kept you out of the long. That was a termination again, kept you out of the short. That termination kept you out of the long. That termination condition kept you out of the short, out of the long. Weak triggers kept you out of the long. Termination, 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 termination. Guys, you don't even have to take a trade to become a great chart reader. You just have to know the recipe for what it means when your rules are met. So go through, take those pictures, go through the whys, do it for each individual rule, and then you're going to piece them together and create a trade, guys. I've had some of you use this and tell me that it's outstanding. Most people won't do it because they feel like it's a lot of work. I'm of the opinion that if you're not willing to do the work, you really don't deserve the profits, right? You're not going to luck your way into being part of the 4% of people that are great traders, that are profitable traders every day. So I'm also going to give you a high probability trend trade checklist, guys. This is a checklist that you can print out, that you can put on your desktop. And what it does is it gives you the rules for the high probability trend trade. You can police yourself. You can make sure that you're following the rules. You can write these rules on a chart to make sure that you're corresponding the looks with what it means, having those advantages. And if you're a visual kind of person like I am, I'm also going to give you the high probability trend trade checklist with pictures. On the checklist, it asks you, is the market coming from a good top or bottom? Is it coming from a termination condition that reversed the market? Guys, there's a video talking about trigger location and potential to break, I would encourage new users to go take a look at it. And you can still take a high probability trend trade without a good top or bottom, but it creates a little more advantage there. You're going to have to manage. What is strong triggers? As you take those pictures, use this picture to make sure that you're taking the correct picture. What are weak triggers? What's a termination? What's potential to break? What's a clear path? And how do I define that window of opportunity? Guys, all of this is laid out for you on this high probability trend trade checklist. And that's going to take you to your very basic plan as a new user, guys. Am I the only person in the world that loves instant gratification? Am I the only person that wants to be at the finish line before the starter pistol ever goes off? I'm notorious for that, guys. I get mad as hell when I'm not an expert on day one. Trading was very humbling for me. Did it go down and make it to the fib, Morgan? Of course it did. Because the people in charge know where that fib is. And Morgan, what you did is you just created a little more trust in the idea that Fibonacci is freaking amazing. It was over there, right? Guys, we're not the only people that know where these lines are. The people that move the market are too. So we're going to take advantage of that knowledge. Guys, this KISS plan, the Keep It Simple plan, is a stepping stone in your learning journey. So if you're brand new with me, this is designed to help you read your indicators. This is designed to give you a trade that wins more than it loses. This is designed to help you build confidence through success. It's going to optimize your chances of success with the high probability trend trade. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, you're going to see more the more you study. You're going to find more entries. You're going to be able to hold for bigger moves. You're going to create your own plan. The simple plan for consistency, though, guys. Don't fight the large chart. Let the large chart be the coolest lazy river ever and just flow with that thing. Don't fight momentum on the large chart. You're one person. You're less likely to win. Don't fight direction. Don't trade into those areas. Let the large chart lead the way, guys, and define your entry. Get into the market where the market is most likely to continue, guys. Great entries create very manageable trades. Great entries are based on statistical advantages. Great entries reduce risk. And then once you're in the market, once you take a few days and you get good at this, you've got to understand how to do something with it, how to manage it. Mike, is this a question about, is it a termination that reversed the market, Mike? Then yes, sir, it is. We'll go back and we'll do a good top lesson. Great question. But a mid band with the large triggers a full bar away, that's a termination condition, right? And when that termination condition reverses the market, it's considered a strong top. Great job on that one, Iron Mike. Guys, management. You're going to create a management plan based on your ability to read the indicators. You're going to create this database in your spreadsheet, right? Through taking a lot of pictures, so you understand when it's appropriate to hold longer, get out sooner, all these different things. But in the beginning, if you allow your management to be just as mechanical as your entries, it creates a huge advantage for new users, because what it does is it takes a lot of the fear out of the trade, right? It keeps it very if-then, very pragmatic. So your very mechanical management plan, guys, it's determined by your perfect entry, right? By your great entry, getting in where the market is most likely to continue. Because once you can identify the window of opportunity, you know where the market shouldn't go, and that's where your first stop goes. And if the market hits it, you're going to be like, whatever, I'll just take the next trade, because I know if I take 10 of these, I'm going to win more than I lose. You don't get to pick your winners and losers, guys. You will never know what the market's going to do. The only thing you can ever be 100% on is whether or not your rules are met. With all those advantages, the market's more likely to give you a reversal bar in the direction of the trade than to go up and hit the stop. It's just statistics, right? Probabilities. You can reduce your risk 2 ticks above that reversal bar and say to yourself, all right, maybe the small crowd has more in them. They might come get me. I'm not touching my stop until the first target gets hit. And your first target, brand new users, is only $100 in the distance. With momentum, with a clear path, with the perfect entry, we're only going to try to make $100 on our first contract, trading 2 contracts. If you hit this $100 with all that momentum, with that clear path, guess what? That money goes into your account. You're no longer active on that contract. That's in your pocket, guys. You just walked over a $100 bill at the Quickie Mart, picked it up, and it's yours. And you're going to move your stop to break even. You're going to say, you know what? I need to learn trust in the large chart. I need to not get caught up on those fluctuations on the small chart. I'm going to hold for my second target no matter what, because it's just pretend money. It's just simulator money, and I'm really developing a little bit of courage right now to hold my position. And if it goes to your second target, that's only $200 in the distance. And that $200 in the distance is a $300 trade, guys. And a $300 trade, if that's the best you do every day, is only $300, that's $72,000 a year, guys. $500 a day is $126,000 a year. You don't have to be in every trade. You don't have to be the first person in. You don't have to be the last person out. You have to be consistent. You have to have an advantage. No, Rob, it's not wrong at all. Everybody comes to this classroom wanting to make everything on every trade. If the market is moving, it must be my money, right? If the market went up and I'm not in it, I did something wrong. If the market's going down and I'm not in a trade, I must be doing something wrong. Other people are getting paid and I'm not. And guys, that's that spoiled brat mentality, right? I deserve it all. I'm so cool. I deserve every penny. Guys, the futures markets move like $20 billion of money an hour. The futures markets trade over $20 billion every hour, I think was the research that I did on that. We're only trying to capture 500 a day. You don't have to be in every move. But if you're in the best moves, you increase your chance of success. Guys, you're not going to find one trade in a day. You're going to find 4, 5, 6, 7 trades in a day. And you're going to lose a couple and you're going to win more than you lose and you're going to protect yourself and you're going to do all these things and you're going to find success if you stick to the plan. So I wanted to take this picture. Things that scare new users, right? Once again, the triggers will probably turn against you almost every entry that you take, guys, because it's a small, fast chart. We have to have that turn of momentum to get us to the best area. Don't let it freak you out. The small chart is an entry chart. Your job is to define where the market is most likely to continue, to commit to that area, to take the trade, and focus on having the advantages, right? So don't get caught up putting a stop. I see this all the time. I'm in the trade. I don't want to lose more than $40. Let me put my stop 12 ticks in the distance, 10 ticks in the distance. Guys, they have cameras. They're going to come hit you and then do exactly what they told you that they were going to do, right? So let your stop placement be where the market shouldn't go. Let it be behind that reversal bar after it gives you the reversal bar. Keep it simple, guys. Keep it focused. Keep it like just effortless. And here's one that I see a lot too. The market starts going down, and guys, right here, you're up some money and you see those green numbers and you're feeling great about the world, and you're like, oh, I would hate to lose now. I would hate for anything to change on this chart ever, this tiny little fluctuation-ridden chart, and you move your stop to break even, and the market grabs you, stops you out, and does exactly what it's supposed to do. And then you start getting close to that second target and you're like, oh, I'm so close to that second target. I don't want to give anything up. Let me move my stop arbitrarily right at the area inside of favorable large triggers. And the market comes up and smacks into you and takes you out and runs straight to your target. The idea of a very mechanical management plan in the beginning, ladies and gentlemen, it keeps you from getting scared out, from getting caught in these fluctuations, from really focusing on just getting in at the right spot and getting out and not giving a damn what happens next. We've all done it, Debbie. Oh my gosh, I teach this class based on every mistake that I've ever made in the market. True story. All the lessons that I give you guys are the lessons and the rules that I've broken, that I've messed up, that I had to take coaching and learn how to fix. And I'm just saving you guys 4 years by giving you all of my hard lessons. Um, so everything is entries initially. And then, guys, what's cool is you're going to begin to realize when it's okay to hold for that bigger move, when it's all right to let momentum carry you to the next area. When the large chart says, dude, Mark, don't freak out. Hold that trade. Turn that $300 into 700. But if you can't read your indicators in the moment, if you can't eliminate a little bit of fear from fluctuations, look at how many opportunities there were for the small chart to give you a little hiccup and pull you out of this trade when the large chart said there's absolutely no way we're stopping before that next area. So all we're doing is we're building trust, guys, and this KISS plan is designed to help you develop trust. This KISS plan is designed, I'm dropping in the room right now, to teach you to enter and to be confident and understanding that you will grow from this one. I'm also going to give you guys my spreadsheet again. I want you filling the spreadsheet out. I'm also going to give you the same PowerPoint that I used to teach the class. You have access to every picture that I give you guys in the room. When I tell new users that I'm going to give you everything that you need to be successful, I mean it 100%. 100%. The only thing that you don't have is experience. The only thing that you don't have is repetition. Hey, good morning, my other Debbie. We are Debbie twice now. I love it. The only thing that Nexgen cannot provide you, ladies and gentlemen, is experience. So you get that through filling out your spreadsheet. You get that through posting in the room. You get that through asking questions, through doing market replay, through practicing the same thing over and over until it becomes easy. And you have to have realistic expectations, guys. It's not going to be easy in the beginning. It's going to be a little bit of work, but it's not difficult work. It's just busy work. Get it done. So guys, that's my first hour. Are there any questions about the high probability trend trade? Just a little heads up, little sneaky behind the scenes. If you click on all of these links, triple dog dare you to not know what you're looking for, right? If you click on all of these links, how are you not going to understand what you're looking for? If you fill out these and come study them, how are you not going to recognize patterns? So the only thing keeping you from success right now, everybody in this room, the only thing keeping you from where you want to be is you. So have a talk with you and work it out. I'm going to take a break, guys. I'm going to go stretch my legs real quick. I stretched this first hour out a little bit because I wanted you guys to really get the gist. I wanted to go slow. I wanted to talk about it. Does everyone see how the triggers don't match? So I don't have momentum. How this fib is being dissected by the large without momentum, right? And look at the fluctuations. If you don't think fights happen at fibs, guys, go back on your small chart at any key area and look at the indecision. Look at the fluctuations. You will become a believer. I'm going to go stretch my legs. Guys, stretch your legs. I'll be back, and when I'm back, we're going to start clicking on everybody's charts and having conversations about it. Remember, when I go through charts live in the room, guys, what I'm doing is I'm going back to advantages. I'm going back to momentum, a clear path, and an entry area. So it's imperative that you tell me what you're doing if you're doing something that is not high probability. Otherwise, it's going to sound like I'm absolutely crucifying you as I talk about the rules that you broke. So I'll be back in a minute. Guys, go grab a drink of water. See you in a sec. Oh my gosh. That was a long first hour. Lasted almost 2 hours. How are you doing, undergrad? Everybody okay? You need anything? You okay? Yeah. You got that it? safe? You have everything you need? Yeah, I have everything all packed up and whatnot. Anything in here you need? No. Good to go. Look and see if there's anything that you can take with you. I think we buy groceries just, and I think April did this out. You find me though, she's good at that. You take care. I love you, Zane. Drive safe. I'm gonna let you over. It was good to see you. You too. Say hi to Hayden when you see him, and I will. Ellie and all of them. And I'm gonna go pee and get back to teaching. I love you too, Zane. I'll see you guys in an hour or so. Was there power at the house? Question mark. I love you so much, period. Just hugged Zane's neck and he's headed home. All right, cool kids. Let's get into the second half of class here and see what we can pull off. I'm going to scroll to the very top of the room in the chat box, and we're going to start looking at the pictures and see what we can come up with. Just a reminder, guys, I have to go back and forth. So I go through the pictures, and I have to scroll back and forth. And so what I'm going to do, Mr. Flowers, is I'm going to click on all of your pictures. And we'll just have a conversation about all of them. It'll be ever so fun. That's not it. That's not it. All right, so here we go. Mr. Flowers got us going. And let's see what we come up with. So large chart. This is where I have to come through and kind of put things together. 2022. So we're talking over here. We have strong triggers. There is a clear path. And you said this was a mistake, right? This was a mistake up here. You went long instead of short. So why were you going long with your small triggers up, with your large triggers up? Your synthetic triggers were down, and your large chart said nothing but down. Okay, so you were going to go short. Okay, so why were you going short with your large triggers up, with your small triggers up? And I know that you didn't really want to show this one so much, but do you see how there's this complete indecision on the small chart? And you traded directly into that mid band. And these are the ones when these are split like this says down, this says possibly up, this says I don't know. That's where a little pause for the cause pays huge dividends. And then we come down here, and you did go short based on the large chart. Cool. And I like this one better. At least here you're coming off of those synthetic triggers. You do have the divergence. And you're saying this chart says we're going down, right? So you hop in and you take a momentum style trade. And you get stopped out of it. Totally cool. And then you jump back into it, hoping that it continues down here. And you lose your momentum with divergence. And it pulls all the way back almost to a mid band. and you do hold it down. And this sparked some great conversation for my brother and I this morning. And I'm not gonna kill you, but I want you guys thinking about something. And I made some pictures this morning. I make 50 pictures a day at least. At least 50 pictures today. So I'm gonna scroll back, and this is kind of what you did. Where is the one that I wanted to see? If you're in a trade, right? If you're in a momentum trade, every trade that you guys take, one, you have to know what kind of trade you took, right? If I'm in a jump in momentum trade, and that's what you were in, Mr. Flowers, you jumped into the market hoping that momentum would carry you to the next areas. You have to have some sort of exit condition as well, guys. If you enter the market, you have to know why you're going to exit the market. And if momentum is your reason for entry, does it stand to reason that a loss of momentum would be just as good for an exit? And this is all I'm saying. Guys, you're going to trade your own plan. And what you'll find, Paul, is that a momentum trade that loses momentum typically turns into a trend trade if the large chart says that it's still going down. So this becomes an awesome management opportunity for you guys. If I'm in this jump in trade, right, and I get a reversal bar, I can get the hell out of that trade. I lost my momentum. I don't have the same reasons that got me in. Does that make sense? Because you're not entering without the momentum, so why would you try to hold it without the momentum? And what this does is this open doors for you, that if the rules are still met, well, then you just look for that trend trade, and you don't have to suffer the drawdown, and you actually kind of get paid twice in the same location. And the same here is true. If you're in this momentum trade and you lose the momentum, be willing to wait for the trend trade, right? Be willing to wait for that next best trade. Because what this does, guys, is it makes it a little more logical. If divergence is a loss of momentum, why would I hold a momentum trade? If a close on the wrong side of the small triggers is a loss of momentum, why would I hold a momentum trade? Paul, I don't disagree with looking for the shorts, right? But I think when you jump in here, we get this connection. Okay, stop talking, Mark. That's all I hear. We get this hope, right? That it's going to work. So there's two choices. I don't disagree with a hold either, if that's in your plan, but your stop has to go all the way up here. And this is where the challenge comes in. Are you willing to keep that much risk on it if it becomes a trend trade? Does that make sense? So Paul, your large chart read is freaking outstanding, and that's why we're focusing more on the management of this trade right now. Are you willing to keep that much risk on it as a trend trade? And if you are, well, then your stop has to go where the market shouldn't. Does that make sense? If I exit here, that's cool. I'll wait for the trend trade. If I'm willing to hold it, my stop is all the way down here. So for me, it becomes a management thing. Your entries are fine. They're your entries, right? And you just kind of have to determine what you're willing to sit through. No, Rob. And that's all I'm getting at there is once you know what got you in, you can make decisions on what gets you out. And then there is that weak triggers, right? Anything can happen. And anything did happen. The market ended up going up. You do have strong triggers. And you don't have an entry. If you just jumped in, you have to be a little weary into a mid-band, right? You have to be a little weary into one-to-ones. You just have to know what's getting you out. But as long as those bars are on this side of those small triggers, didn't get that reversal bar, you could hold it. But I don't see an entry there that fits my rules. I don't know where you would have gotten in. And then this one, odds favorable, path was clear, pull back to the mid band, and you were annotating the previous captures, and that happens. But do you see how that worked? Your loss of momentum turned into a trend trade. And this is a good example using your picture, Mr. Flowers. And guys, this is great for you folks that love jumping into the market, that love trying to take care of it, get in on that little quick move. And I'm going to tell you, I was saying that, Paul, you got me thinking a lot about management this morning, and going back to Ron's. And at the risk of inflating Ron's ego, you'll notice that he rarely holds a momentum style trade for more than 10 ticks, because he knows that momentum's going to die, that it's probably going to retrace, because that's what the market does. So this creates the opportunity to exit the one trade and then get in on the next trade. One for commish, exactly. So this is a great example of exactly what I was talking about. If you held that momentum trade that you wanted, your stop had to go all the way down here. But if you simply exit it, well, then you find the reentry, and your new risk is 4 or 5 ticks. Pretty cool, right? And that's what we do in here, guys, is we take your ability to find a trade, and if I find a way that you can do it better, outstanding. So once again, jumping in. No, not at all. So let's go through it, Paul. Thank you for asking that. Large chart says go, right? You're comfortable with that? Large chart says go. So we wait for the reversal bar. That's the first step, is you wait for the reversal bar. Once you get the reversal bar, where are my triggers? Synthetic and large, right? And the tighter they are, the tighter they are, the less indecision. But where's your only area inside? Midband, right? So for this trade that you didn't take, this is your window of opportunity, which means that you're in at 81, which means that your stop is 5 ticks after this reversal bar. Beautiful. Here's your next reversal bar. So at the time of the reversal bar, once again, from the top of the triggers to the bottom of the triggers, and then you have 2 correction points with that big split, once again. There's no areas inside of those triggers, and there is a 1-to-1 right at the top of those triggers. So honestly, if you're following rules, those 1-to-1s represent the best entry. I assumed, Malcolm. Does that make sense, Mr. Flowers? Here everything is perfect, it's low risk, it's easy to identify, and here it didn't get you, right? It just didn't make it. And then this is the dreaded, the dreaded, not my money. Because what you did is you jumped in without the advantage of momentum on the small chart, right? You jumped in directly into a problem area on the small chart, and you jumped in at the perfect spot for it to possibly retrace and give you that trend trade entry. And I don't know how this one turned out, but by getting in up here, do you see how your stop still has to be really way down here? I hope it was pretend money. And then one other thing, I think I replied to you, Paul. So NASDAQ is the angriest girlfriend that you've ever had on meth. Gold is her little sister. And precision on gold, precision on the NASDAQ is important. So does that make sense how that wasn't your window of opportunity, but rather a late jump in on a trade that should have started all the way down here? And sometimes we just have to be willing to say, you know what? It's just not my trade. And that comes with experience. But so this is where I'm gonna offer a little help for study, Paul. Um, I want you to do this. I want you to open up the spreadsheet and go to the client trades. And anywhere it says perfect trend trade long, I don't want you to look at anything but the entry. And I want you to really drive that into your head that the perfect entry comes from areas inside of favorable large triggers. And I promise you, if you come through and you take this picture, that's the same picture, trend trade short, and you start to see that connection with areas, waiting for the pullback to the areas inside, what's going to happen is that, whoops, what's going to happen is that, woo, that's tiny. Who does that to me? Is that you're going to begin to notice that the easiest trades, the biggest winners, the best of the best, aren't jumping into the market hoping that it continues, but rather identifying the areas inside of triggers and really capitalizing on that move. And it's going to help teach you a little bit of patience. It's going to reduce your risk dramatically. And it's also going to maximize your profit potential. And it's a pretty cool thing the way that works out. And I think I missed one more of your pictures. Let me go take a look. And guys, I'm telling you right now that when you post these pictures in the room, I don't want to see the perfect trade every trade, right? I don't want you sandbagging. I don't want you showing me how great you can do it. I want to see where your mind's at. I want to see where the potential mistakes are so that we can figure out how to fix them. So here's your last one, right? I jump in with strong triggers, totally cool. And you got out at the area of resistance inside of favorable large triggers, Paul. Does, after talking about it a little bit, does that kind of help? So you do have strength on the large chart, right? But you don't have a clear path. You do have momentum on the small chart, but this 78.4 entry, where did we lose momentum? Right there when that bar closed, which means that you could have, with a pretty conservative management plan, lost 2 ticks instead of losing 78.39. Oh my gosh, you're making me do math. I believe that's 16, 17, sorry. That's a huge difference, wouldn't you agree? That's a huge difference. That's $150. When momentum fails, be willing to exit, and then if the large chart still says go, hell, take your entry. It's a lot of money, and it adds up. And this is the great thing about this class, is that once I see what you're doing, and this is for everybody, not just Mr. Flowers, once I see what you're doing, once I know what you're thinking, once I begin to recognize your patterns, we start to work together to make it more profitable. So something to think about, and again, I don't give trading advice. Whoa, that is so tiny. Pull your readers out, guys. Let's make it a little more legible. If momentum is the reason for an entry, right? And that's the AKA jumping in trade. Maybe if you decide it should be so, let a reversal bar on the wrong side of the small triggers be an exit. Does that make sense, Mr. Flowers? So for grins, this is what I want you to do, and I'm going to show you, this is how we develop trust and how plans become a real thing, is I want you, just for grins, to go back to your last 5 jump-in trades and see how much money a simple management plan might have saved you or made you. And that's kind of what gets you next level is that understanding, um, not only of what you can make on the correct trades, but what you don't have to give away once you start to incorporate a little management to it. And guys, entries come before management. So you're right where you need to be, Paul. You're right where you need to be. And I'm stubborn as hell. So we're going to get you where you want to be by you showing me where you're at. So great stuff, man. Thank you for all that sharing this morning. A lot of great lessons for everybody. So for you guys that are looking for these jump in trades, that's not just Mr. Flowers' lesson. That's for everybody. Maybe incorporate something like that. And then I was waiting for my rules to be met. And guys, this is kind of the new user, but make it visual. I really thought that termination condition would break for me, right? And then this one was inspired. When momentum is gone, sometimes you have to let go of a trade. And then finally, trading counter trend is a new user. And these are just kind of little funny things, right? Whatever. It's silly. But burn this picture into your head next time you try to trade into a brick wall of resistance. And next time you try to hold that momentum trade, remember that they let you know they're done. So kind of funny stuff. And then Paul, taking pictures, saying everything is up, the triggers are beginning to accelerate, the path is clear. That was your entry right there, Paul. Your arrow was your entry, 100%. 100%. That was your entry if you were going to take it. It had to be managed. So 3 divergences. Does this make it a strong top? Man, I'm going to stick to the recipe, Paul, for brand new users, that for a strong top, I really want to see an area on the large chart. As you grow with the software, these multiple divergences might give you an opportunity to catch something a little sooner. But here, still, all of your triggers are above the areas, so there's just nothing to do. Small chart said don't go long. Large chart says don't go short. Just sitting on your hands, 100%. Good stuff. Good recognition of the multiple divergences and working it into your day. And then scrolling up, scrolling up, scrolling up. And then I love this, guys, the idea of base hits. Odds favorable momentum and room to the target outside of the momentum and 11 ticks, guys. That's a 4 lot. That's $440 worth of money in 6 seconds. No need to hold for bigger moves. No need to hope it goes somewhere. No need to wait for it to lose momentum. Get in, get out, call it a day. Nice one, Ron. And guys, I gotta tell you, one of the great things, and I love, it just makes me chuckle. Ron used to scare the ever-loving crap out of me with these trades because they didn't fit the high probability trend trade rule, and I really had trouble wrapping my head around just jumping into the market. And then I thought, you know what? I'm going to do what Ron does. And then I got slaughtered trying to replicate what he does because I didn't really study it. I just thought he was jumping in. So this is where I just say thank you to all of you that post pictures, guys. You make me a better trader too. You make me think about things that I would have normally not thought about. And I've learned a lot from a lot of the pictures that you guys post. So thank you for that. Paul, there is that pivot from nowhere, right? The divergences don't necessarily. Yeah, and that's exactly what it was. I said, Ron, what's the name of that trade? He's like, it's my trade. It's, guys, it's amazing. It's like the first time your kid beats you arm wrestling when I watch you guys pulling stuff off from your chart reads, and I'm not gonna lie, I'm gonna take it from you. I will take it from you. If it's good, it will be mine. So just a 50-50, right, Paul? Not a termination, strong triggers, potential to break, no divergence, tiny window of opportunity, perfect stop placement. You got paid at $100 and out break even, and you labeled this one, Paul, a hope trade. Um, you labeled this one a hope trade. Can I respectfully disagree with you on that? This is the most mechanical, well thought out, beautiful advantages that was managed perfectly. And I'm not going to lie, dude. This is only $110. Do this 4 times every day and you'll never have a worry, right? That's $96,000 a year. Dude, I'm telling you, this is beautiful. This is not a hope trade. It's not a strong top, but you have no divergence, tiny window, perfect entry, and you didn't say, I sure hope all these areas break. You said, I know they're not broken. Let me get paid and let me protect my profits ASAFP. So Paul W., I think you're better than you give yourself credit for. And I've watched this progress over the last 30 days from all of your posting and your questions, and I'm seeing this consistency with you. And I want to make sure that you're seeing it too. Because guys, we never celebrate our own victories, and I'll do my best to celebrate them. But I'm going to tell you, go out and high five yourself because that's some great trading, man. And then perfect, Rob, 100%. Great trainer wheels. That's exactly what they are. Rob, you killed it. Absolutely perfect. 100%. I'm stealing it. And I'm taking it to these trades that I want people to study. And I'm going to put it in there. And I'm going to call it Rob S. Perfection. Long trade. And Rob, that one needs to go in your favorite looks. Because that's the one, dude. Strong triggers, everything up, perfect pullback. Split triggers, you waited for the area. And man, it was easy. Beautiful. I love that trade. I got goosebumps. I got goosebumps. And then, Rob, that's one of those ones that you can hold a little longer, right? That's that one that if you're in at 36, it never slowed down until it bumped into a fib. So if you're out at 67, that's your $300 trade on a contract. Really nicely done, man. You just got to learn them until they're easy. You got to learn them until you can see that without any hesitation at all. And then once you believe in the recipe, guys, everything falls into place. All right, Mr. Flowers says 50-50 look. 22 fibs. It's a 50-50. Okay, so you got in late, right? Because the real entry was, we went through this one together in class. The real entry was back here a little bit, right? At the very top of the move. And by the time you get here, Paul, if you're not in that move, that's kind of sketchy, right? Large triggers are up, smalls are above it, but these say down. You're not positive this area is going to break at this point. This one becomes a little harder to catch. This is where, and I still agree because the large chart says go, this is where I am forcing that reversal bar to get me in. I'm forcing a little bit of confirmation instead of just jumping in at a mid-band when these are up, right? So it's not, no chance of being favorable large triggers. My small chart's already starting to show change at the area. This is where a little confirmation bar, waiting for the reversal bar before you get in. If this area isn't going to break and this market's going to rocket up, waiting for that reversal bar keeps you from getting hornswoggled, if you will. Does that make sense? If you're in on the first one, you can ride it out a little bit, but if you're going to get in late, Get a little confirmation because at this point, I'm already break even and probably not looking because I've had a couple divergences and now my triggers are all above the area and it's gotten ugly. But it's a great large chart read, right? And that's where when the large chart is great and the small chart isn't, it's okay to get a little confirmation. It's okay to force the market to tell you that we're going in the direction that you think it's going to go. So good stuff. All right, Morgan. Morgan says, also use, let me make this bigger. I'm old. Top may have been strong because of divergence. Nope. So Morgan, what's a strong top or bottom? I want you guys to learn to embrace language. I'm a huge fan of it. And I'm very rarely not specific in the language that I use. So when we talk about strong tops and bottoms for the new users, you have to have a termination condition first. And then the termination condition has to reverse the market. So here's the picture right here. In order to be considered a strong top or bottom, you have to have a termination that the triggers don't get through, and then it has to reverse the market. Does that make sense, everybody? So what you run into on this one, man, that's just kind of a pivot from space. That's coming from the middle of nowhere. And this is where I think language, this is one of the downfalls of you guys having an English major as your teacher, is I really do believe there's a lot of power in the language that you use. So if you learn the recipe, right? If the recipe says it has to be a termination condition that reverses the market, then all you have to do is recite the recipe in your head to realize that's not a termination. But this is definitely odds favorable momentum, right? And this is definitely the potential to break. And you went long, and I'm not sure why you went long, and then you got stopped out of it. And then you went short, which was the right thing to do, and you made money going with the momentum of the path. It's hard to see that. I can't see any of that over here. So you're not showing me any of these on your small chart, Morgan. It just helps me if you show me your entries. And then this one, can we talk about this one? Because this one's freaking amazing, Morgan. With all of that momentum, with all of this indecision out of the way, right? You let the fight happen, and you traded the breakout of the area. And this is when the small triggers come through, little snapback. This is the perfect momentum style trade. And the only challenge with this trade, Morgan, is that you chickened out. You didn't have a reason to exit. Does that make sense? Everything else about that look, strong triggers, break the area, sell the snapback, and what you're doing is you're trading the breakout here. So until I get a reversal bar on my small chart, I'm going to ride this momentum as far as it will take me. And if I'm not mistaken, that was this morning. If I'm not mistaken, off of that look, let's see where the small chart finally said it was time for you to get out. So there was your entry. This is just a little salt for your wound. There's your first reversal bar at 70, Morgan. And I know that you mentioned in the classroom that you probably should have held that one a little longer. But do you see how your small chart told you? We're still cranking. That was your first exit condition. Does that make sense? I love this trade, and I love that you caught it. And when you have this look on the large chart, you couldn't have done it any better. So just like we said earlier, once you start nailing entries, you got to learn how to manage them. And if you have an exit condition beyond, holy shit, I hope it doesn't take my money, There was zero reason to exit that trade all the way down to this divergence low, and that was well over $300. Great picture, man. Great momentum entry on that one. Really like how you did that. Let's see what Malcolm did. Malcolm takes the jump in trade, right? Odds favorable, everything down, jump in, jump out. No, totally different. You just jumped in. You said, here it goes. But I love it because you made money, right? He was in up here. You know what, though? You were in, what is that, 48? He was, no. Were you in it? You were in at 18. He was in at 45. 37 points? 27 points difference? Are you guys competitive with each other, being friends? He's in at 18. Oh, hold it. Okay, I see. So you took the first leg of it. Sorry, I got you. And then Morgan, you took the second leg of it. Took me a second. Got it. Beautiful. Momentum clear path, right? If you're going to jump in, know where your trouble is. Perfect. And then it scrambled for a little bit. And then Morgan, or who was it that took it? Paul Flowers. That was your best entry, right? That was the first really good one. And then it scrambled for a little bit. And then we caught the second leg of it. Great job, guys. And Malcolm, props on being willing to just get paid, get out, and wait for the next best one. And then I have to shake my virtual finger at you for not getting back in there because, man, that was pretty. Nicely done. All right, Miss Jen, let's see what you did. Oh, and yeah, there's so many different ways. There's so many different ways to do it, Morgan. It's pretty cool. Momentum trade, odds favorable, price below the small triggers, large triggers are tight. Did you get into this one, Jen? Because I think this was right there where you're pointing. That's right where Morgan got in too, right? And then get out with the loss of momentum. Absolutely beautiful. Nice trade. And guys, for all of you that are watching this, you're seeing people take trades that you're not comfortable with right now. Study them because you will get comfortable with these trades. You'll be amazed at the trades that you can catch 30 days from now that you were terrified to even consider when you first started with the software. And it's a lot of fun to go back and go, whoa, that used to terrify me. When price reaches a mid-band and the large triggers are a full bar away, it says don't go long. Brilliant, Jen. So guys, this is your gap theory picture. When price reaches a mid-band or fibs and the large triggers are a full bar away, don't go long because it's likely to close the gap. Did it close the gap, Jen? Do you have an after picture for me? It doesn't always, but there's definitely the potential, right? All right, loss of momentum, weak triggers, synthetic on top of large, 5-1 but flat. Took this trade at the pivot, not your trade, but backed out. Got lucky, didn't lose my money. Second divergence printed is above the first, no more long trades. All right. Mr. Flowers, are you feeling secure today? I do this sometimes, and I don't want anyone to feel like I'm beating them up. Total loss of momentum. You know what? Screw it, I'll keep looking. 100% termination condition. F it. Let's look for an entry anyway. No areas inside of favorable large triggers. Bet I can make this mofo bend to my will. These are the greatest pictures ever. Because, guys, your language literally tells you that you know this sucks. You typed it out. And you took the trade anyway, but here's the deal, is the language comes after the trade, right, Paul? In the moment, you're just taking the trade. And guys, I can't tell you how many times I've gone back and annotated my charts after a trade and went, oh, man. So what you have to do is exactly what Paul did. So Paul, the fact that you said you got lucky, I'm excited, right? But you've got to transition from remorse to awareness. And that's where repetition comes through. So I love this one. Not my trade, backed out. Beautiful. I love this chart because it says, hey, you know what? I broke my rules. I made a mistake. I got the hell out. Let me go back and analyze why I shouldn't be in this trade, and I'm less likely to take this trade next time. So gold star for you, Mr. Flowers. That's where growth comes from, guys, from constant analysis. And not just the winners, but constant analysis, especially the ones that you shouldn't have taken. You're going to take them. Hell, I still take them. But I have to know. And look, your gap theory worked over and over. And then right into the termination. How many lessons can we get in one chart, Jen? I love it. It did close the gap back to the triggers. They got a little close. Into the termination. That's a tough look. The S&P doesn't look like they're just giving it away today. Doesn't look like they're just giving it away. Great annotations. Guys, if your rules aren't met, start taking pictures. Right? If your rules aren't met, start taking pictures of termination conditions. Keep committing them to memory. 50-50, no divergence, window. Did you take this one, Jen? Is there an after picture of you getting paid? Or of conditions changing? You lost? Area with the potential to break. Two areas with the potential to break. No divergence, tiny window, tight stop. Hell yeah. Do you feel bad about losing it? Were you looking to see what you did wrong? Good. That's the answer I'm hoping for, guys. And let me show you, and I hope you don't mind. We're just having fun, right? That's all we're doing. And I say this a lot. When you know what kind of trade you're getting into, you know that it's not a high probability trend trade, right? So you know that 61 isn't a broken area. You know that 70 is not a broken area. But you do know that it has the potential to break with momentum. So you said, you know what? If my small chart is perfect, if I have odds favorable momentum, if there's no divergence, if I can justify a tiny little window of opportunity with minimal risk, hell yeah, I'll take a shot at this medium probability trade. And Jen, I think you did it beautiful. You had that termination, everything reversed. It was a 50-50. Every condition was perfect to take a shot at this trade. And it didn't work. And if you just go back to your plan, right? If you just go back to what's the best way to take this trade? You had it 100%. 100%. So great trade, Jen. Way to step into the kill zone, be willing to take the trade because it fit your plan, and way to be okay with the result. That's the hard thing, isn't it? To take the perfect trade and it still doesn't work. So let's see what we have. Termination condition, 100%. It's really termination, odds favorable, clear path, divergence prints. So magenta didn't reverse the price, Cindy. Price already reversed. That line didn't print till here. Let me show you a picture that John Novak and I have done a lot of study on in the last couple weeks, especially for the NASDAQ. When divergence prints from the low or divergence prints from the high. I even took one this morning. This is how in tune with the study we are on this right now. If I get a divergence that prints from the high and I'm looking for a trade, I'm insisting on a reversal bar to get me into the trade. Does that make sense? The only way I'll enter at this area if there's a divergence on the high is if I get a reversal bar. Well, you got it, right? And I'm going to tell you right now, Cindy, I would have been in this trade right here on the reversal bar, and my stop would have been right here. And when it continued up, I would have had the same insistence on a reversal bar right here, and that might have kept you out. Go back and study this a little bit. Are you using the 10-2 or the 13-2? Did you swap over to John Novak's 10-2? Or are you still using the 13-2? Either way, it's still the same. But your entry really was right here with the small triggers so far away. If you were going to get in, this was your area. And when it failed, that's where it told you, hey, Cindy, wait for confirmation because we already failed from the best spot. Does that make sense? And it takes a little bit to get that line of thinking in that quickly. So I like the trade. I really do. I think you took it from a good spot. This divergence from the low, for me personally, it makes me insist on a reversal bar now. And I can't tell you how many losers that keeps me out of these days. Turnaround is imminent? No, it's not, Rob. Then why are you trading it, my dear? If it makes you crazy, why are you trading it? Adrenaline junkie. Let's go skydiving and swimming with sharks. That's good. I get a lot of people that say I keep losing on the NASDAQ, but they keep trading the NASDAQ, right? Loss of patience? Yeah. So Cindy, when I was 17, I dated this girl, and she was mean. She was every redhead stereotype ever. She even hit me with her pickup truck. And I dated her 3 separate times, Cindy, because I liked the thrill or something. It was an adrenaline thing. I don't know what it was. And eventually I had to say, oh my gosh, I got to stop. You don't like the S&P? Have you looked at crude oil? I like crude oil. But Cindy, the NASDAQ doesn't have to drive you crazy. There's a couple simple things on the NASDAQ that will help a lot. It's okay. I love the NASDAQ. All I trade is the NASDAQ. But there's a couple little nuances on the NASDAQ. One of them is don't fight the small triggers, ever. When you get to the area, if those small triggers aren't a full bar away, be patient. Another one is kind of like the one that we just talked about. If there's divergence on the high, insist on a reversal bar. And it's these little nuances that make the NASDAQ a lot easier to trade. So with that 13-2 chart, if the small triggers are less than a full bar away, wait for that close on the correct side. It's gonna save you a lot of heartache. And if those small triggers are a full bar away, get in at the area. And then you have time to manage if they're gonna bounce. And if you look at the picture that you posted, Cindy, check this out. If you would have gotten in at the area, do you see how they bounced off the small triggers? Go back and look at trend trades that you've lost. And then when you get to this one, look how close they are. And this is what people forget. Let me go to my large chart real quick. So Cindy, and maybe this will help. Would you go long right there against those triggers? Probably not, right? No. So this is what people forget is this 13.2 chart on crude oil is your entry chart over here. So when these small triggers are screaming on any other market, Cindy, you're probably looking for a long right here. So if you take that little bit, once you get here, smalls are on the other side of the large, and then they're screaming against you. It's so much easier to exercise that patience and not fight them. And it takes a little bit to get through that. So the way I told Mr. Flowers, go back and see how many times that close on the wrong side of the small trigger should have taken him out of a momentum trade. Go back on 10 trades, Cindy, and see how many times these small triggers were right up on your entry and you got run over. And I think you'll have this light bulb over your head moment where you're like, oh. And then once you eliminate that, for me, it probably eliminated 50% of my losers on the NASDAQ. And it took a lot of study for me to get to that point. And it took quite a few Apex accounts being blown out until I committed to it. So good stuff. And then Rob, it's not imminent, brother. It's still a downtrend. It's still momentum. It's two divergences, but it's not even from that area. It's not imminent. Don't do that to yourself. Right now, everything says down. The second that you start thinking it's going to do the opposite of what the indicators say, that's an opinion. That's this picture right here. So change the language from turnaround is imminent. Just say, if 27 breaks, I'll look for shorts. If everything rolls, I'll look for longs. And then just type out over it. I don't have any freaking idea what it's going to be. But my indicators are conflicted, so I choose not to trade. So great picture there, though. And good job recognizing the higher divergence and how that can change things. But as long as this one is red and down, I'm only thinking short until something actually changes for me. And I may have said Ron, I meant Rob, sorry. And here's a great example, right? There's that odds favorable. There's two divergences. Great exit here, Gerard. Gerard, are you with me in here? I do this every now and then just to, I guess, make a point of how it doesn't have to be difficult. So this termination condition was right here, right? I just want to make sure I'm reading this right. And this is going to seem ugly, and it's not meant to. That termination condition is great, but honestly, it's rear view mirror. I like knowing it's there, but we're not going to let it influence too terribly much. Ron, have a good one, man. Putting up with me. Yep. Go out and live a little life. Love it. So let's go through, Gerard, just for grins. Let's go through the three rules. So what are they? Strong triggers, right? No termination conditions. I'm going to say area inside favorable large triggers. I want you to see how simple this can be. So strong triggers, smalls above large, larger wide, angled. Gerard, there's your first yes, right? I like it. There's your first advantage. Directly into resistance, 100%. No triggers even threatening. How do we feel about the termination conditions? That feels like a no. That's rule number 2 not met. Are you comfortable with that so far? So there's our first red flag. But you're thinking to yourself, it's coming from a termination. Maybe this area will break. So I go to rule number 3, area inside of favorable large triggers. And this is where we're going to refine our view a little bit. And we're going to go to that small chart. And I'm gonna blow this up. Whoops. What did I do? Go back. So here's a trigger, and here's a trigger, right? Do you recognize that as the split trigger look? Where you end up with 2 correction points. The market may go to the synthetics. It might go to the large, but I'm not really sure. And you'll notice, and this is kind of a cool thing that you'll begin to catch onto. The only area is a squiggly little green line that's caught in the purgatory that is between those 2 correction points. So honestly, rule number 3 isn't met. I don't have, an area inside of favorable large triggers. I don't have a clear path. The only thing that I really have is momentum. And then just to compound it and make it a little worse, Gerard, you have divergence directly from a 1-to-1, directly from the termination condition, letting you know the small chart is already telling you not only are we headfirst into trouble, we're even losing momentum there. Does that make sense? And all I'm doing is I'm going through the very basic, what are my rules? And this is why I encourage you guys, don't deviate from the rules. Don't stress yourself out with these things. Learn them individually. And this right here for me is pretty much enough to say, God, this just isn't a good idea. But if you let the language of the rules kind of reinforce that your areas aren't even in there, then this becomes a problem too, and this loss becomes avoidable. And once the loss is avoidable, you choose not to take it, then when you do take the awesome trade, right? You take that great trade and make $300 on it, you're not giving up $250 from the loser and sitting there on $50. Wondering if you can supersize. Awesome. Good stuff, Morgan. Thank you for being here. It's like biology class. So let's go back to that picture. What you really did is that's this one. You know what I might do is I might start sticking these pictures on the charts. That was you hoping that resistance broke, and it just didn't. It's okay. I love the termination. The momentum is outstanding. Let's just keep it simple. You don't have to trade into areas. It looked good except for that red fib. It really did. It looked awesome except for that red fib. So where are we at now? Termination, 50-50. Do you guys get it? Small triggers are through, large triggers are not. This area has the potential to break. If for some reason I get a reversal bar, actually, you know what? That's the potential breakout bar right there, selling at 26. If it turns into a reversal bar, I have a mid band right at the top of the triggers. Does that make sense? If I try to trade the breakout, I've already had my entry and my stop is the reversal bar marker. Oh, dissection, I got you. That makes sense. So if I'm going to try that momentum, strong triggers, oh, wait a minute, I don't have strong triggers. Whoops, that momentum trade should come off the table. So now I'm looking at a mid band right inside of the triggers. If I get the reversal bar, if I get the pullback, and I have to say to myself, I really don't want divergence. Do you guys see how I'm just going through the rules? I have a termination. It reverses the market. It provides me momentum. I'm waiting for the pullback. And at the time of the reversal bar, here's my triggers. There's my only area because my reversal bar happens on the other side of this one. What do you guys think? Can I go ahead
Order submitted.
and dare the small crowd to come back to me? guys see what I just did there? I walked through it. Where am I coming from? I'm coming from a termination that reversed the market. That's a strong top. Do I have momentum? Absolutely. That's a great look of momentum. Do I have a clear path? Not so much. So at this point, I go from high probability to medium probability. So if I'm going to take a medium probability trade, I want a tiny little window of opportunity. So Paul, I right click above price, sell limit 4. And now if price comes up to my limit order, it's going to put me in the market. I just used it right here. Nexgen gives you all of these ATM strategies. 1 lot, 2 lot, 6 lot, 4 lot. These all come when you download. Yep, so to activate a sell limit, I have to click above the most current price and then check it out. If I click below, it asks me if I want to buy the market. It won't let me do it. But like if I'm looking for a long trade, I can put a blue limit here and it says if it comes down to here, then I want to go long. So, Michelle, great question. When I say no clear path, there's 3 options for a clear path or for when I reach an area. So the first one is that when price reaches the area right here and the triggers remain above, that's a textbook termination condition. Does that make sense? So let's start with the basic. Right here where price reached and the triggers remained above, that's your termination condition. That's don't go short. That's I don't know what's going to happen. Are you with me on that one, Michelle? Did I lose you already? Okay. But now I have small triggers have smashed through the fib, right? With odds favorable momentum. But my large triggers are still lagging. They haven't cleared the area. So the area can't be cleared yet, which means that I don't have a clear path yet. So what I'm looking at is this fib has the potential to break based on the momentum. But until the large triggers are below, it's not a clear path. What does that mean? It means any trade I take short is not a high probability trend trade, which means that if I'm going to take this entry, I want to make sure that it's nice. I want to make sure that I have momentum. I want to make sure that I'm not putting a lot of risk on the trade. I want to make sure that things look good over here because this area isn't broken yet. And Michelle, if you go back and look, that divergence low didn't quite break, did it? Because the large triggers remained above. And the smalls got above, but the large didn't, and it bounced back. And you start to see this look, and you know that it's not a clear path. And your brain will go through this process. I love this. I think everybody should make one of these for their desktop. If this is the recipe for the highest probability trend trade that you can take. If you understand these 3 simple concepts, right? Strong, smalls outside of the large, clear path, small and large beyond the area, entry area, lines inside of favorable large triggers. The second you say, whoa, my path isn't clear, what happens is your brain really begins to insist on the momentum. And your brain really begins to insist on that entry area, that perfect low risk areas inside of favorable large triggers entry area. And if you speak to yourself in terms of advantages, 1, you can recognize advantages, but 2, you become very clear on when those advantages are gone, and maybe you have to be a little more aggressive in your management. Does that make sense, Michelle? So as this trade begins to materialize, this area is still not broken. This midband still represents my potential entry, and if divergence prints, it didn't, maybe I say with that little bit of risk,
Order submitted.
I'm willing to sell that mid band, but I know that this isn't high probability because the area is not broken. I know that there's a chance that this area doesn't break. And I'm not willing to put $1,000 on this trade because it's not high probability. Or if I decide from here to get in at the lowest area, right?
Order filled.
The lowest area of resistance inside of favorable large triggers, I know exactly where my stop has to go. I know exactly where my trouble spot is. So you begin to play these things out in your head. I do have a termination. The momentum is good. This is your window of opportunity right now. From the low to the high, right? Some people will say the only way that I'll take this trade is from the highest point, and if it doesn't make it, it's not my money. Some people say I'm willing to get in at the low spot, and if it pulls up to the high, I'll add contracts. And some people simply say, you know what? It's not my trade because this only has the potential to break, and you'll figure out
Order canceled.
what your methodology is, right? But does $140 per contract seem like acceptable risk for maybe trade? That's what you have to work through.
Order
Am I
filled.
willing to risk $280 for the potential to make 220 when I don't even have a clear path? Does that make sense? I hope that answered it. And then, Jen, you said now you understand what I meant with the NASDAQ and the reversal bar. You don't trade the NASDAQ, but it makes sense. Cool. The great thing is, guys, is everything starts to make sense more and more. I don't think the NASDAQ is the dangerous market as long as you have rules. I don't think crude oil is a problematic market as long as you have rules. Honestly, I don't think any market is a problematic market as long as you have rules that have been proven to win more than they lose. And it's the second I begin to deviate from my rules, right? I know that it's not a clear path, but I'm going to take the trade anyway. The hard part's sticking to the rules. And Michelle, you have to take losses to begin to trust the rules. You have to trade into this fib right here to say, oh shit, that was a bad idea, right? And you have to take those anything can happen triggers and watch it reverse against you. And you've got to trade into this to begin to believe it. You've got to go back and you've got to just start making mistakes. But the key is every mistake you make, you've got to go back. You've got to annotate the chart. You have to have the courage to admit that you weren't right in that trade. And this is what went wrong, and this is how I avoid it, and move forward. And as long as your only goal is profits, as long as the only thing that you're thinking about is making money, you're probably going to make the same mistakes over and over. But if you shift your focus to my goal every day is to follow the rules and accept the consequences because my rules have been proven to win more than they lose, you'll start talking to yourself the same way we just talked through this. I do have odds favorable, but I don't have a clear path. And if I don't have a clear path, I want the best entry. And if my best entry means that I have to have at least $150 worth of profit instead of only 110, then my only entry comes from up here. And you start going through this in your head over and over. And it's really pretty freaking amazing how you start to weed out the bad trades. But I like Jen's practice and Paul's practice of taking pictures of the trades that don't fit your rules. Take pictures of the trades where you would have to break a rule to get in, and instead of pulling the trigger, annotate the picture on why you didn't take it. And it doesn't mean that it won't be your trade 6 months from now, but in the moment, you're training your brain that following your rules is the only course of action. So, guys, that is it for me today.